Good morning, students. Are you able to hear me? Come on, quickly join हो जाएं सभी जन. Yes, very good morning. Very good morning. Yes, come on, everybody, do join fast so that we'll start with today and very amazing revision because today we'll be doing cost sheet, we'll be doing unit and batch costing, we'll be doing job costing, contract costing. There's so many things today what we are going to cover. Okay, so आज बहुत मजा आने वाला है. ठीक है और कॉस्ट शीट वी ऑल नो इन एवरी पेपर 10 marks sure shot, right? So today we are going to do a lot of things. Okay. Okay, fantastic. Chaliye, if you have joined the class, mark your attendance. Okay, like the video, and we'll start with the session. Come on, mark your attendance, everyone. Very good morning. Come on, keep interacting. Very good morning, everyone. Good morning, Shreya. Good morning, Sanmita. Good morning. Morning, Samitha. Come on, good morning, guys. Good morning. Okay, I'll wait for a minute for everybody to join. Okay, very good morning, Abhijit. Yes, very good morning, everyone. Come on, let everybody join and then we'll start with our session. Today it's going to be an amazing session. Okay, in the previous session, the chapters were big, right? The chapter was especially overheads, like it was a big, huge chapter, and plus some complicated things were there in that chapter. Yes, hello, Shri Raksha. Today, the topics which we are going to take are the topics which are actually very scoring. जो टॉपिक्स आज हम लोग करने वाले हैं उसमें बहुत स्कोर किया जा सकता है, इसलिए ये हमारे लिए बहुत रेलेवेंट है. ओके, तो कम ऑन. यस, गुड मॉर्निंग शिखा, गुड मॉर्निंग सृजन. Okay, those of your friends who have not joined yet, kindly message them. The lectures have started. Okay, let's join. Okay, I will not waste time. Okay, I'm just waiting for a minute. अगर सब ज्वाइन हो जाते हैं फिर हम लोग लेक्चर स्टार्ट कर देंगे. ठीक है, I'll wait for a minute maximum, then we'll start. Good morning, Vaishnavi. Okay. Chaliye. So today, the first revision what we are going to do is again a very important chapter, and that is nothing but the cost sheet. Okay. Uh, yes. Very good morning, Malika. Come on. Chaliye. So today, the topic which we are going to take, okay, the topic with which we are going to start, okay, is cost sheet. Okay, good morning, Satish. Yes, is cost sheet. Cost sheet is a very important chapter because in every paper we have seen that it is coming for 10 marks. Okay, so 10 marks एकदम हाथ का एकदम easy है, right? It's very easy and you can easily secure 10 out of 10 out of this chapter. Okay, now what exactly is a cost sheet? So basically cost sheet is nothing but a statement, understand, in which what you do is you try to ascertain the cost of all the you try to ascertain the cost of sales. In fact, there are 4 heads in a cost sheet. Okay, and we try to calculate each one of them. Like we calculate the prime cost, we calculate the cost of production, we calculate the cost of goods sold, and we calculate the cost of sales. So cost sheet is a statement in which it is going to be a summary of all the costs which are incurred for that particular job or whatever unit. Okay, now what are the different elements of cost? So first of all, you should understand cost sheet is prepared on a functional classification. What do you mean by a functional classification? So what happens is in a cost sheet you distribute the cost sheet in terms of the functions, like production is a function, administration is a function, selling is a function, right? So you distribute the cost sheet in terms of a function. Okay, so remember that it's going to be a functional classification in a cost sheet. Now when you are doing a functional classification, see, we have direct materials, direct employees, direct expenses. Then you have the production overheads, which will be related to production. Okay, so all indirect expenses related to production. You have indirect expenses related to administration, selling, distribution, and research and development, and etc. Now, there are 4 different heads in a cost sheet. Now, what are the 4 different heads? I have already told you. prime cost, cost of production, cost of goods sold, and cost of sales. So these are four heads, right? Prime cost of production, cost of goods sold, and ultimately you get cost of sales. Now, what do you mean by prime cost? So three things together will make a prime cost. Now, what are the three things which together makes a prime cost? So direct material plus direct labor plus direct expenses will give you the prime cost. Now, I want to tell you something. One student asked me, sir, we are going to receive the notes. Yes, definitely you are going to receive the notes today. By most probably by today, we'll upload in your groups. Okay, so you'll get it today itself. So direct material plus direct labor plus direct expenses will be prime cost. Okay, that will give you prime cost. Now, what do you mean by direct material? So direct material, we have already seen the material chapters also. You have to take the cost of material. You have to include all the expenses to bring the goods to the present location condition. In fact, we take the landed cost of materials, right? And then if there are any trade discounts, we have to reduce. If there are any duties, rebates, if we can take the credit, then we have to reduce that. If we can't, okay, we simply add to the cost like that. Next, in employees, we have to take all the employee cost, maybe wages, maybe allowances, maybe overtime, maybe bonus, maybe employers' contribution to the provident funds, etc. Indirect expenses. Now, students, something for you, I want to tell you. In the ICI new study material for May 2024 exam, this is a separate concept what they have added. Now you may say, sir, we already know direct expenses. I know you know direct expenses. But what has happened is in the new study material, they have added two new questions only on direct expenses, where you have to identify the direct expenses out of a list of 6-7 expenses. Okay, so this kind of questions have been added. So it is quite possible they may ask you this question in your exam. Okay, they may ask you this question in your exam. Now, obviously, it is not possible for you to keep on checking what all questions have been added in the new book. Okay, but always remember this: ICI has a tendency to ask new questions. Okay, so it is quite possible that that question may be asked, and the way I've already told you, I'm already in the preparation of that most important questions book. Okay, where I'll keep a separate section. Okay, where all these new questions which are added in the new material. Okay, but they are relevant for the old course. Okay, will be separately added so that you don't have to waste your time. Okay, obviously time is money for you right now. Right, time is everything as of now. So I'll keep a separate section in that where definitely you can check that. Okay, remember. Now, direct expenses. So direct expenses will have power and fuel, royalty paid, hire charges. Remember this because this is important from the new material also. So and from your exam perspective also. So direct expenses is power and fuel, royalty paid, hire charges for some specific equipments. Okay, which we have got for that particular job. For technical assistance with respect to that specific job. Then you have that amortized cost of molds, patents, and patents. Now, I want to tell you something. There is something, a little bit confusion. Sir, there is amortized cost of mold, pattern, and patent over here. And there is something also like tools, jigs, and fixtures. So remember, there are two different things. In factory overheads, we take the amortized cost of jigs, fixtures, and tooling. And in direct expenses, we take the amortized cost of molds, patents, and patents. So remember this. This is very tricky. Okay, so if the amortized cost is of molds, pattern, and patents, it is to be taken in the direct expenses. If it is amortized cost of jigs, fixtures, and tooling, you have to take it to the factory overheads. Okay, you have to take it to the factory overheads. So remember that, please. Okay, so that's slightly very tricky. In fact, I can say that this is also amortized cost, this is also amortized cost. So if it is mold, if it is a pattern with specific with respect to that particular job, you have to take it in direct expenses. If it is a tool, if it is a fixture, if it is a jig, okay, so what happens is you have to take the amortized cost over factory overheads. It is I'll tell you something, this jigs, fixtures, and toolings, okay, this is kind of an equipment in a factory. So their amortized cost is kind of their depreciation. Okay, so their depreciation will be added as a factory overhead. It's very much like depreciation of the plant and machinery. It's very similar to that. This jigs, fixtures, and they are just fixed like this. Okay, they will always be in a particular position like that. Okay, so they will be treated as a plant and machinery, and their amortized cost is treated as a factory overhead. Now, any other direct expense will also be treated as a direct expenditure. Now, we have seen direct material, direct labor, direct expenses. Now, after adding these three, we get the prime cost. Now, students, opening stock of material plus purchases minus closing stock of material, will get direct material consumed. Okay, we'll get the direct material consumed. I'll tell you the entire format also. Okay, we'll make the entire format. Don't worry about it. So opening stock of material plus purchases minus closing stock will give you direct material consumed. Let me tell you a simple thing. Suppose I was having 100 units in the opening stock. Okay, 100 units is in the opening stock. Yeah. Suppose I was having 100 units opening stock. Okay, and I purchases 2000 units. So how much stock is I am having now? I was having 100 units. Now I have purchased 2000 units. Okay, I have purchased 2000 units. So I'm having 2100 units now. Out of which, suppose only 500 are there in closing stock. Out of 2100, only 500 are there in the closing stock. It means that I have consumed 1600 units. 1600 units of raw material I have consumed during the production processes. Okay, so this is very simple. I was having some opening, I've added something, something is left in the stock, and the gap is nothing but it was consumed during the purchase procedures, during the production procedures. Next, in the cost of production, you have to take what all you have to take: prime cost plus factory expenses and related costs. You get the cost of production. I'll be making an entire cost sheet. Don't worry about it. Okay, now this is all a format given. I'll be making everything, cost of sales and everything. Now students, it's time for me. I think I'll make a entire cost sheet for you first. Okay, and then we'll discuss the respective elements in that. Okay, in the meanwhile, what you can do is you can also start preparing a cost sheet along with me. Okay, you can start preparing a cost sheet along with me. Now just give me a second, please. This is a big format of the cost sheet. So students, this is my cost sheet where I generally have 3 columns. Okay. Now, sometimes I may have 3 columns like this, particulars, rupees, but many a times we have seen that in a cost sheet, what they normally do is they ask you total cost and cost per unit. What they ask you is total cost and cost per unit. Okay, so these are the two things which are generally asked. Okay, so remember that: particulars, total cost and cost per unit. Now, so we normally prepare these 3 columns. Obviously, you can make cost per unit inside and total cost outside. Now, how it starts? It starts with, remember this, the first element, the first head is with respect to the prime cost. So in prime cost, I know there are 3 things, that is raw materials, labor and expenses. Now for raw materials, I must calculate raw materials consumed. Now how do I calculate raw materials consumed? So in this, I first take opening stock of raw materials, add purchases of raw materials less closing stock of raw materials. So understand, opening stock of raw materials, add purchases of raw materials, and then closing stock of raw materials. What do I get is, after doing all this, I'll get raw material consumed. Sometimes we refer raw material consumed by direct material consumed. In many problems, it is straight away given. After this, you add direct labor, you add direct expenses. So all the direct expenses have come now, materials have come, labor have come, and direct expenses have come. After I take a total of all these 3, After I take the total of all these three, okay, raw material, labor and expenses, I get prime cost. What do I get? I get the prime cost. Okay. So raw material consumed plus direct labor plus direct expense gives us the prime cost. Gives us the prime cost. Now, after getting the prime cost, what you have to do is you have to add factory overheads. We'll add the factory overheads in that. Plus, we will add opening stock of WIP. Now, someone may say, sir, after adding this factory overheads, we get the gross factory cost, but it is not required to write all that. Okay, that is why I am directly writing opening stock of WIP less closing stock of WIP. So I'll add opening stocks and less closing stocks. Sir, when we have to add and do we have to always add and subtract? Yes, opening stocks will be always added, be it raw material, be it WIP, be it finished goods. Openings are always added and closings are always subtracted. So factory overhead, add opening WIP less closing WIP, I'll get factory cost. The other name for factory cost is the works cost. Okay, I'll get the factory cost or I'll get the works cost. Now, students, please understand this, that with like after prime cost, okay, I have added the factory overheads, and since I have added all the expenses related to the factory, I have adjusted the opening closing WIP. I get the entire cost related to the factory. That is why it has been called as the factory cost. Now, how you have to remember after factory cost, F for factory, F for FIU. So remember that F for factory and F for FIU. Okay. So there are 5 items to be added after factory cost. Now, what are the 5 items, sir? So the 5 items what you have to add, the first item is quality control. The second item what you have to add is research and development related to production. Okay, remember that. I'm not writing all that, but it has to be related to production. So research and development. Third, administrative overhead. Administrative overhead related to production. Administrative overhead related to production. This is the third element you have to add. Fourth, credit for recoveries. Now, what is this credit for recoveries? Credit for recoveries. Now, what you have to do in this credit for recoveries is basically scrap value of byproducts. You have to subtract scrap value or net realizable value of byproducts. You have to subtract this. You don't have to add this. Okay. We all know this is standard rule that the sell value of the byproducts is to be reduced from the cost of the production. Okay. So credit for recoveries, and then I'll get primary packing cost. Primary packing cost. I'll add this also. So after adding all these 5 elements, okay, so as I have told you, F for factory, F for 5. Now, what are the 5 items, students? First was the quality control. Second is research and development. Third is administrative overhead related to production. Fourth is credit for recoveries, which you have to subtract, okay, scrap value of the byproducts. And fifth is the primary packing cost. After adding these 5 items, you get the goods are now entirely ready. So you get cost of production. What do I get? I get the cost of production. Now, after getting the cost of production, what you have to do is, after getting the cost of production, we have to add opening stock of finished goods less closing stock of finished goods. Less closing stock of finished goods. Okay. After doing all this, now there is a tricky adjustment, because in maximum questions, the value of closing stock of finished goods will not be given. Today, I'll be taking an example in the class where the closing stock of finished goods is not given and we have to solve that. We have to get that answer. Okay. So how we calculate closing stock, I'll show you today. Okay. There's a very important adjustment. Next, because in 90% problems which come in exam, now they never give you closing stock. They always expect the student to calculate the closing stock. Then you get the cost of goods sold. And in this cost of goods sold, we have to again add or subtract a few items. Not subtract, rather, we just have to add. So we will be adding selling and distribution overheads. Obviously, we can keep separate, okay? Selling overhead, distribution overheads. We will be adding general administration overheads. Which are general. Will be adding secondary packing. Sometimes secondary packing is included in distribution overheads itself. Okay, so secondary packing cost, it can be included in distribution overhead, that is acceptable. And after doing all this, what we get is, you get the cost of sales. And in cost of sales, we normally add profit to get sales. We add profit to get sales. I hope everybody has understood the entire format. Now, I have got a query. Sir, what about pollution reduction expenditure? Bharat, your query is very good. Pollution reduction expenditure is a part of the factory overheads. Okay, so it will be included in the factory overheads itself. Whenever we'll be using this, see this in the factory overheads, when we'll be taking, it will be included in that. Okay, it will be included in that. Let me show it to you. See this? Can you see this? The list of factory overheads. I have actually not yet discussed in the class, Bharat, like what are the elements of factory overheads, what are the elements of administrative. This was my actually upcoming topic. See this, pollution control is taken in the factory overheads itself. Okay, so we always take it over there. Any doubts? One doubt you may have, sir, do we have to write the final figure of factory overheads over here, or can we write the heading of factory overheads and we can write one by one all the items like depreciation of machinery, pollution control and other items? Can we do like that? So the answer is you can do both. You can make a working note also, like you can refer working note number 1 and make a working note, calculate the factory overheads and add over here. You can do this way also. You can also do like make a heading like in this only factory overheads we have written as a heading. Okay, and after that we'll leave some space. We'll leave 4-5 lines to write all the factory overheads. Then we'll add the closing, opening and closing. Okay, like that. So this way also it can be done. Both way it is allowed. It is up to you to decide which one you like. Both are acceptable. Now students, I'll repeat the format again. So this was the cost sheet, right? Or raw material consumed, we start with it. Okay, raw material consumed, opening stock of raw material, add purchases, less closing stock of raw material, we get the raw material consumed, add direct labor, add direct expenses, we get the prime cost. In prime cost, add factory overheads, add opening WIP, less closing WIP, then you get the factory cost. F for factory, F for 5. Remember, F for factory, F for 5, which are the 5 items: quality control, research development, administrative overhead related to production, credit for recoveries in which you reduce the scrap value of the byproducts. Okay, and then you have the primary packing. Okay, basically any scrap or any byproduct, anything is there, you have to, if there are recoveries, you have to subtract that. Primary packing. Then what you do is, cost of production you will get, add opening stock of finished goods, less closing stock of finished goods, and you get the cost of goods sold. And once you get the cost of goods sold, there are remaining items like administration overhead, general, selling and distribution overheads. The third one is secondary packing cost. Okay, and then you get the cost of sales, and finally you add profit and you get sales. I've got one query over here. Shikha is asking, if nothing is mentioned about administrative overhead, what shall we consider? Students, if nothing is mentioned about administrative overhead, we always consider those overhead as the general overhead. If nothing is mentioned about the administrative overhead, whether it is related to production or whether it is general, we'll always assume it to be general overheads. Okay, we never assume it to be administrative related to production. Administrative overhead related to productions are specified straight away in the question. Okay, so remember that. Any other queries you may ask? Now, students, we have already discussed the format and everything. Now, see the elements of factory overheads. Now, in factory overheads, see what we have to take and what we don't have to take. We'll quickly discuss the items because we have to solve a problem also on this. We'll be solving an entire cost sheet problem. So, consumables, stores and supplies, consumables, stores and spares, depreciation on the factory building, depreciation on plant and machine, everything is included in factory overheads. Lease rent of some production assets if they are there. The plant and machine factory building, if there are any repair maintenance, there are any insurance charges of those, okay, that we have to take. But remember, insurance charge of raw material and WIP is also to be included in factory overheads. Now this is something important and it will confuse you when you are solving an actual problem. Insurance of stock of raw material and WIP is also factory overhead. Okay, we normally know प्लांट एंड मशीनरी डेप्रिसिएशन फैक्ट्री ओवरहेड में आएगा, बिल्डिंग का डेप्रिसिएशन फैक्ट्री ओवरहेड में आएगा, लेकिन रॉ मटेरियल और डब्ल्यूआईपी का ये इंश्योरेंस कहां आएगा? तो रॉ मटेरियल और डब्ल्यूआईपी का इंश्योरेंस दैट विल बी ट्रीटेड एज अ फैक्ट्री ओवरहेड. रिमेंबर दैट. With respect to the amortized cost, I have already told you it is here also, it is here also. So if it is pattern, if it is mold, if it is patent, then you will treat it as a direct expense. If it is the amortized cost of tools, fixtures, jigs, they are all fixed items. Okay. So if they are, if there is any amortized cost of them, they will be treated as a plant and machine only. So they will be treated as a production overheads. Sir, factory overheads, what are the different names? So factory overheads can be called as work overhead, production overhead, manufacturing overheads also. Okay, work, production, manufacturing, there are the other names. Indirect employee cost related to production. Then you have the drawing and designing department cost. Then you have this tool room cost, engineering, maintenance, pollution control equipments. Students, ICI has been asking a lot of questions, especially on pollution control. Okay, so remember, pollution control is nothing but a pollution control equipment. Okay, so any expense related to that will form part of the production overheads. Okay, this one is important, and this stock of raw material and WIP is again important. Consumables will be important, that is a part of factory overhead, not a direct expenditure. Okay, so remember that please. Once we have got the factory overheads, we have discussed the entire format. Now let's see what all comes in the general administrative overhead. So in general administrative overheads, basically is the office factories and all office buildings and all that. So office building, furniture, their depreciation, their maintenance expenditure, their rent maybe. Okay, then the salary of the administrative employees, accountant, the lighting and insurance of the factory. Sorry, why I'm telling factory again and again. Insurance and lighting expenses of the corporate offices, then maybe printing and stationery, maybe any office supplies which are there at the offices, legal charges, audit fees, meeting expenses, everything whatever is incurred in the offices. Okay, so this is nothing but the office overheads or administrative overheads. Remember, administrative overheads is also having other names. Administrative overheads, office overhead, management overhead. They are all one and the same. Next, selling overheads, basically related to the sales. Now, salary and wages with the sales department, rent, depreciation, maintenance with the sales department. Then you have advertisement, especially advertisement. You have to remember advertising, marketing is all related to selling overheads. Sometimes we call selling overheads as the marketing overheads. Okay, remember that. Even salesman traveling expenses, salesman commission, they are all part of selling overheads. Secondary packing is generally to make the product marketable, like to store it, to transport it, and to making a fancy packing so that it can sell, like that. Distribution overheads are basically the person who are engaged in the distribution of goods, okay, supplies kind of. So basically for that supplies, what we have, we normally have some vehicles to deliver our goods to the customer. Okay, sometimes we have our employees who are just engaged in distribution of goods to the customers, like that. Okay, so transportation and insurance costs with related to distribution. Then you have depreciation, higher charges of, suppose I'm having a van, and whenever I go to deliver the goods, I use that van. So depreciation charges of that van, higher charges or maintenance charges or any other operating costs related to that will be treated as a distribution overhead. We have seen the entire format. Now there are some items we must understand which are normally handled in a special way. The first thing which you have to do is abnormal cost. Any abnormal cost do not form part of cost of production, and they will be directly straight away transferred to the costing P&L account. Next, subsidy, grant and incentive you have to reduce from the cost. Suppose you have got a subsidy for a material cost, so reduce it from the cost of materials. Penalty, fine, damages, demurrage, they do not form part of cost. Now I want to tell you one again an amendment in the new book. Okay, I am again telling you an amendment in the new book of ICI May 24, where for the same question they have changed the solution. I am telling you this, they have changed the solution. Okay, so remember that this new solution is definitely relevant for you. Interest and finance charge, we all know interest and finance charge do not form part of cost of production. They will be transferred to costing P&L. We know that. This was the earlier thing. Now see what has to be done. Interest and other finance costs that are not included in cost of production shall be presented in the cost statement as a separate line item of cost of sales. It means that when you are calculating the cost of sales, interest and finance cost will be added in the last. Okay, so sir, where have they actually changed this? In which question they have done like that? I'll tell you. One question was there, which was a very big question. Let me show you that. One very big question. Yes, this is the bigger question. See, this is the big question. Can you see this? This illustration number 3. In illustration number 3, what they have done is, actually they have this wages for employees engaged in distribution. They have cut this and they have made this interest and finance charge. They have changed the item. Okay, amount has been the same, and this was presented separately in the cost sheet. Okay, this was presented separately as a separate line item in cost of sales. Now how they have done it, like see this, we have got the cost of goods sold, we have got administrative overheads, then we were adding selling overhead, then we were adding distribution overhead, and then we have to add interest and finance charge. Okay, interest and finance charge, I'll write directly 7,20,000, and that will be again added in cost of sales. So answer will not change. But remember this, that interest and finance charge have been treated as a separate line item in cost of sales. So this is new amendment in the new book. They have changed this in the new book. So this is definitely relevant for your exam. 101%. It is relevant for your exam. Okay. I'm on a consistent basis. I'm seeing the new book now. That is, I'm able to locate the changes from the previous book, and these are relevant for your exam. Remember that. So have you all understood this? If you have understood, please tell me yes or no. Have you understood the amendment? What you have to actually do? Earlier, what we used to do is interest and finance cost we directly used to ignore. We just used to write a note, interest and finance cost to be ignored. But now we have to present it as a separate line item of cost of sales. After cost of goods sold, add one more line of interest and finance charge, like that. Have you understood this? Have you understood this? This is a new thing. Okay, earlier it was not there in the old books. Even in November 23 it was not there, but they have made this change in the May 24 book. But this is relevant for your exam. This is 100% relevant for your exam. Perfect. Perfect. Okay, great. Now, students, let's take up a problem based on cost sheet. Okay, let's take up a problem. I'll be taking a problem where we have to calculate the closing stock of materials, closing stock of finished goods. Students, you will be coming to question number 2. You'll be coming to question number 2. Page number 6.21 of the cost sheet chapter. From the following particulars, you are required to prepare a monthly cost sheet of Aditya Industries, opening inventories, raw material, WIP, finished goods. They have given that there are 10,000 units. Closing inventories, raw materials has been given, WIP, finished goods, they have given a question mark. Can you see this? They have been given a question mark. Raw materials purchased, GST on raw materials purchased, ITC is available, input tax credit is available, wages paid to production workers, expenses paid for utilities. Sir, what do you mean by utilities? Utilities means like water supply and all that, okay, which is essential for production. So water supply, gas, they are all utilities. Even electric is utility. The expenses paid for utilities, office and administration expenses, traveling allowance paid to office staff, selling expenses, machine hours worked is given, machine hour rate is given, unit sold, unit produced, desired profit, which is 15% of the sales. Now, students, let us start making a cost sheet. Okay, I'll again make a new cost sheet for you because I'll be solving this problem with you. Remember, there are only few items given over here. So in our cost sheet also, we'll be taking only those items which are there. Okay, we do not have to make the entire cost sheet. Okay, we don't have to make the full cost sheet because there is no quality control, no research and development. So we don't have to take all that. Okay, let's start. Come on, guys. You also have to make this. You also have to solve this. Okay, let's make 3 columns. Cost sheet, cost sheet, mm, particulars, particulars. Now, total cost per unit. By the way, cost per unit, they have asked you or not? They have just asked you actually monthly cost sheet. They have not asked you. Okay, they have not asked you. So even if you don't make that, that is okay. Okay, even if you don't make that, that is okay. I hope you are all ready. Now we all know the format. We start with the raw materials, right? So raw materials, opening is given, purchase is given, closing is given. So let's start with raw material consumed. Raw materials consumed, in which I have, this the heading, right? In which I have to take the opening stock of raw material plus purchases less closing stock of raw material. I'll get raw material consumed. Raw materials consumed. So what is the opening stock of raw materials? Opening stock of raw material is 12 lakh. 12 lakh. How much is the purchases? Purchases is 1 crore 44 lakh, and closing stock 14 lakh. 1 crore 40 less 14 lakh. Come on, add it and subtract it. If there are any calculation mistakes of mine, please let me know. Okay, plus 144. I normally try to avoid, but sometimes it's a human nature. So obviously, many times it can happen. 1 crore 42 lakh, right? 1 crore 42 lakh. Now, this is raw material consumed. What we have got? We have got touched the three items. One is raw materials opening, one is raw material closing, and raw material purchases. Now, after getting the raw material consumed, we all know we have to add the direct labor. So they have given wages paid to production workers. Direct, we'll add wages to production workers. Wages to production workers. We'll simply add that 3664. 36 lakh 64,000. Now we have to add the direct expenses. Sir, which is direct expense? Direct expenses will be expenses on utilities, that is 145,600. Okay. So expenses paid for utilities. Expenses paid for utilities 145,600. Sir, do we have to take the GST also on raw materials? Beta, GST for raw materials for which input tax credit is available should not form part of cost. If they have mentioned that, if they would have mentioned that input tax credit is not available, or if they would have mentioned that we are not a GST dealer, then what you have to do is you have to add it in the cost, because we won't be able to get the credit. So GST, in fact, any other taxes, if you get a credit, if you get a refund, that will be added in cost. If you don't get a credit, if you don't get a refund, that will so sorry, by mistake I told you something error in error. If you get a credit, then you should not add it in cost. If you don't get a credit, if you don't get a refund, then you have to add it in the cost. So here what they have given is ITC is available, input tax credit is available, right? Input tax credit means kind of a refund. Okay, so if you are getting that refund, if you are getting that input tax credit, it is not our cost only then, right? So we should not write that. Okay, now, but remember this, after the cost sheet, we must make a note. In exam, we must make a note. GST paid on raw materials. GST paid on raw materials for which ITC is available should not form part of cost. Should not form part of cost. So remember, we must make notes. That is essential. We must keep on making notes. This is essential. Now I've made that note. I've done all these adjustments. So now raw material is done, GST is done, wages is done, expenses or utilities is done. Now you can see there are administrative and all these things. Okay, administrative, traveling and selling expenses. And there are some opening, closing, WIP and finished goods. Plus there is an adjustment, machine hour worked, machine hour rate, unit sold, unit produced, and 15% profit. Now I'll get the prime cost. I'll get the prime cost. Sir, you have not added anything, you have not done anything in the cost per unit column right now. Yes, I have not done anything because I have made that column only to calculate the closing stocks. Okay, I'll calculate the cost per unit when I'll be done with the cost of production. That time I'll be doing that. In the raw materials, I was not having the quantity, how much quantity was there. So in prime cost also, I'll take the totals of for this. So 1 crore 42 lakh plus 36 lakh 64,000 minus, plus 145,600. So it's coming 1 crore, is coming 1 crore 80 lakh 9,600. 1 crore 80 lakh 9,600. Okay, that's the prime cost. Now I'll add factory overheads. Factory overheads. Now, sir, where is the factory overheads given? Machine hour worked is 21,600 hours and machine hour rate is rupees 8 per hour. What do you mean by this? It means that if you are working for 1 hour, your on an average overheads of the factory are 8. So you have worked for 21,600 hours. So 21,600 into 8. So that is 170 to 800. That is the factory overheads. You have to just multiply this two. Okay. Machine hour worked into machine hour rate to get the factory overhead. So 21,600 into rupees 8. 21,600 into rupees 8. So that is 172,800. Just add this. Plus 1 crore 80 lakh. So is it 181,82400. One. I don't know what is the problem with my pen. One eight one 82400. This is the gross factory cost. This is the gross factory cost. Now, after doing this, I'll add opening WIP, opening stock of WIP, less closing stock of WIP. Right? After factory overheads, I'll add the opening WIP and less the closing WIP. So what was the opening WIP? Opening WIP was 18 lakh and closing WIP was 16 lakh 4,000. 18 lakh I'll add. 18 lakh I'll add. I don't know what is the problem with this pen. And closing is 16 lakh 4,000. Subtract that. Now plus 18 lakh minus 16 lakh 4,000. So it is coming 1 crore 83 lakh 78,400. That is the factory cost. That is the factory cost. Okay, because this office admin, office and selling expenses, everything. Okay, I've got the factory cost. After factory cost, there are actually 5 items. One is quality control, second is research and development, third is administrative related to production. Now there are some administrative overheads, but I don't think they are with respect to production. This office and administration expenses, traveling and office staff, these are not related to the this thing production, right? So fourth is credit for recoveries, which is not there, and fifth is what, the primary packing, which is also not there. So basically, I have directly got the factory cost as well as the cost of production. What I got is the cost of production. I've got the cost of production. So remember that there are no 5 items, right? So I've got the cost of production. Students, have you got this? Have you got this cost of production? Now what you have to do is, in this, add opening stock of finished goods. Add opening stock of finished goods. Add opening finished goods and less closing stock of finished goods. Right? Add opening finished goods less closing stock of finished goods. So how much are the opening finished goods? So opening finished goods is 9,60,000 and he has given you for 10,000 units. So 9,60,000 for 10,000 units. Okay, 10,000 units. So for 10,000 units, you have got 9,60,000 as the opening inventory. Now you have to calculate the value of the closing inventory. See this, we have produced 1,94,000 units. They haven't given you the closing stock of finished goods, right? We have to calculate that. They have given that we have produced 1,94,000 units. How many we have produced? We have produced 1,94,000 units. We have produced 1,94,000 units. We have produced 1,94,000 units, and in the opening I was having 10,000 units. Can you tell me how many units are there in my stock? It has been told that we have sold 1,60,000 units. We have sold 1,60,000 units. Students, try to understand how many are there in the stock. Come on, how many are there in the stock? We have sold 1,60,000 units. I have produced 1,94,000 units. I have sold 160, and opening I was having 10,000 units. So how many stocks are there in the closing stock? I know opening stock plus the new production minus closing stock will give me the sales. But I have already got the sales. So what I'll do is opening stock plus production minus the units sold, I'll get the units which are there in the stocks. Okay. So can you tell me how much is the stock left with me? How much quantity of stock is available with me? Come on, students, do calculate. How much quantity of stock is available with me? Quantity I want. 10,000 was opening. 194 is the production. 194 is the production. Sold is 160. Sold is 160. So how much is there in the closing stock? Okay, I have already got the answers from Malika, Abhijit, Bharat, Sanmita, Srujan, Shreya, Siddesh, Samita, Vaishnavi, Avisha, Sriraksha, Pratik. Absolutely perfect, students. All of your answers are correct. The closing stock left is 44,000 units, right? Opening plus production minus sales, I'll get the closing stock quantity as 44,000 units. So 44,000 units, 44,000 units is the closing stock. Now students, how to measure this stock? Now this is for what we are actually solving this problem. This is what I wanted to teach you. Students, this is the factory cost which I have incurred. Everybody do take it on your calculator. 1 crore 83 lakh 78,400. This is my cost of production which I have spent for 1,94,000 units divided by 1,94,000 units. So my per unit cost is coming somewhere 94 rupees 73 paisa, and I am having 44,000 units in stock. Multiply by 44,000, I get the closing stock as 41 lakh 68,296. 41 lakh 68,296 or 297, I can write 297. Have you understood the working how I have done this? I'll repeat the working again, students. I'll repeat the working again. What you have to do in this questions, whenever you get the cost of production divided by the quantity produced. So 183,78,400 divided by the quantity produced, which is 1,94,000. Come on, one more time we'll do. 183,78,400. I have taken this on my calculator. I have taken the cost of production on my calculator divided by the units which is produced, divided by 1,94,000. So I get my per unit cost. I get my per unit cost which is coming 94 rupees 73 paisa something in decimals. Okay, 94.73 and like that. So this divide by this, okay, I get the cost per unit and I am having 44,000 in my stock. So I'll just multiply this number by 44,000. I'll just multiply this number on the calculator. I'll not change the decimals into 44,000. I'm getting 4168,297. That is the value of the closing stock. Have you all understood the procedure? Guys, have you understood the procedure how to do cost of production divided by the quantity produced multiply by the units in stock? Multiply by the units in stock. Have you all understood this? This is the most crucial adjustment. Cost of production divide by the quantity produced, you get the cost per unit, multiply by the units in stock. Multiply by the units in stock. You get the value of the closing stocks. Perfect. Perfect. Now, after this is done, if there are any queries, students, if you still some of you are having some queries or doubts, please ask. If any of you is having any doubt, please ask. After doing all this, you will get cost of goods sold. So 183,78,400 plus 9,60,000 minus 41,68,000 297. So I get 151,70,103. The most important part is done now. I've got a query, sir. If cash discount is given in the question, then can we say that it is excluded from the cost accounts as it is of a financial nature? Yes, you can do that. You can do that. You can do like that. So that is cost of goods sold. Kirti, I'll tell you one more thing. Normally, you can do like that, but sometimes what happens, you also have to check the reference of the question, how the question is being framed, like that. You have to check that also. Okay, so sometimes I know generally cash discount is a kind of an interest thing, so it should not be taken in the cost of production. You can exclude it. Okay, but sometimes what happens is you have to see the reference also, because it happens all the time, right? Means a particular thing in one question they do something else, in the other question they do something else. So sometimes you have to see the reference of the question also. Okay, so remember that. Sir, if some unit are in scrap, okay, in cost of production, and then unit of closing stock will also be reduced by such unit. Normally, Abhijit, if some units are scrapped, okay, still they will be giving you specifically how much are there in the stock and all that. Okay, if that is not given, then you will have to calculate that. But whatever it is, okay, I'll tell you in this. What will happen is, suppose if some units have scrapped also, you have to take the cost of production, you have to take this and divide by the good units which have been produced. So you don't have to divide it by the scrap units. Okay, scrap cost is already reduced above. You have to divide it by the units, the good units which have been produced, okay, and multiply the good units which are there in the stock. Okay, so the process will remain the same. Fine, Abhijit? The process will remain the same. Process वैसा ही रहेगा बेटा उसका. Now sold is given, produced is done. Now we just have to add the profit and this three expenses. Come on, add. I'll add administration expenses 2650. You can simply write all this. Office expense, traveling allowance, office expense, traveling allowance, sales staff, okay, selling expense 646, 26, 52, 121. 26, 52, 1,21,000. Now plus 26 lakh 52,000 plus 1 lakh 21,000 plus 6 lakh 46,000. So I got cost of sales. Yes, Abhijit, you are saying good unit rate had to be used for such adjustments. Yes, you can use that, Abhijit. You can use that. Yes. In fact, I'll tell you something. What we have actually calculated is nothing but the good unit rate. Once you, what we are trying to calculate is nothing but the good unit rate only. Okay, because we are dividing by the units produced, which are good only. They are good unit. Only. There are any abnormalities, any which is we have to remove it from the cost sheet. So 1 crore 85 lakh 89,103. 1 crore 85 lakh 89,103. You have to add 15% on sales. Now, students, 15% on sales, how we have to add? Suppose if the sales are 100 rupees, the profit will be what? 15 rupees. So how much should be cost? Cost should be 85 rupees. The cost should be 85 rupees. So this represents 85%. Divide by 85%. So this will be 21869 21869,532. 532 like that. Okay, so this is how it works. 532, or I can write even 533. What is happening? Not working appropriately. Okay, students, have you all understood? See, they have given you that the profit margin is 15% of the selling price. They have given you the profit margin is 15% of the selling price. So what I am doing is, if the selling price is 100, the profit has to be 15 rupees. So the cost has to be 85%, right? The cost has to be 85 rupees. So this cost represents 85% of the sales. I have divided it by 85% to get the 100% of the sales. Everybody clear? So this is all from our chapter. Okay, this is all from our chapter, which is cost sheet. We have discussed all the basics. We have discussed the cost sheet. We have even solved a problem on that. And the most important thing, how to calculate the closing stock. We have also seen that. Cost of production divided by the units produced into the closing stock quantity. Into the closing stock quantity. That's the way how we do that. Is it fully clear? Can we move ahead? Just give me a second, please. Come on, students. There are so many students who are watching the lecture, but many few interacting. Why so? Very few interacting. बेटा कुछ भी करने का interact करते रहने का. ठीक है. Always keep interacting, keep talking. Okay. That actually motivates us also. कि yes, somebody is watching the lecture, right? Okay. Ultimately, this is for your benefit, right? for your benefits. This is an entirely free inter crash course, right? Chalo. Unit and batch costing, students. Unit and batch costing. चलो एक बार सब जन थोड़ा सा इंटरेक्ट कर दो बेटा, कुछ तो भी बोल दो, हाय हेलो गुड मॉर्निंग यस अंडरस्टूड, कुछ भी जो बोलना है बोल दो, थम्स अप दे दो, ठीक है, बट कीप इंटरेक्टिंग, कम ऑन, एक बार मुझे पता तो चलने दो कि कौन कौन देख रहा है बेटा लेक्चर. Let me understand who all is watching in the lecture. At least say hi or say something. There's so many students whom I can see that there are so many numbers watching, but they're not replying only. They're not just sending any messages. They're not interacting. Why so? You don't have to be afraid. Just keep on asking your queries, keep on interacting, keep on enjoying. Come on, come on, come on, come on. I'm waiting for replies. Yes, yes, yes. Hello, 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 hello. Okay, very good morning. Very good morning. Okay, so Omkar, you are there. Arya, you are there. So at least what happens is you send a message, so I know you are there, right? So I'll have a fair idea who all are watching the lecture. So what will happen even after our crash course completes? If some of you send me a message and ask me a query, I will not even understand that yes, you were there and attending the lectures, right? So it should not happen like that. Chalo. Okay, thank you so much, guys. Thank you so much. Chalo, let's start. The next topic is a very small topic, unit and a batch costing. Okay, it's a very small topic. We will be talking about only from exam perspective, right? So unit and batch costing, students. In this one, there are two sections. One is a unit costing and second is a batch costing. Now, I'll tell you something. This is a topic which normally students, they all know it's a very easy topic, but they kind of overlook it. Okay. Um, they kind of overlook it. Okay, so remember that. I'll tell you one thing. In recent two papers, in May 23 and November 22, in this recent two papers, the batch costing questions were asked in a compulsory questions. God knows why, but batch costing questions were asked in compulsory questions. So you can understand 5 marks compulsory from this topic in the recent two papers, the most recent two papers. So obviously it makes sense that we must do it very thoroughly. Okay. I'm not expecting it to happen this time also, but yes, they have asked you 2 times from this topic. So definitely we can't ignore this. Now, unit and batch costing. First of all, unit costing is basically where you will produce only same type of units. Okay. Same type of units you are producing all the time. That is unit costing. Now, what are the same type of units? Like for example, paper, cement, steel, works, mining, breweries, etc. Now, I'll tell you very simple example where when you are producing only a single type of unit, like suppose you are producing cement or you are producing only steel. So what you will do is you will take the total of cost of the entire factory. Okay, you will take the total of the cost of the entire factory divided by the total tons what you have produced, and you will get the cost per ton. It's very simple, right? The total cost of production divided by the number of units. So because we are producing only one type of unit, it is very easy for us. Just take the total of cost divided by the quantity produced and you get the cost per unit. It's very simple, right? So that is unit costing. Now, in this unit costing, there is one more concept over there, and that is spoilage and defective works. Now, what happens is if the spoilage and defectives are due to normal reasons and the actual defectives are within the normal limit, then the cost of rectification will be charged to the output, basically treating it as a good unit only. If the number of defectives are way too high, no doubt the loss was normal, but the number of defectives substantially exceed the normal limit, then that abnormality, then that excess part will be transferred to the costing P&L. Okay, beyond the normal limits, it will be transferred to costing P&L. Ultimately, if the loss has happened, if the spoilage or defectives are happened due to abnormal reasons, directly it is going to go to the costing P&L account. There's no doubt about it. So this is from the unit costing. Unit costing is very easy. Okay, just take the total of the cost, okay, divided by the quantity produced. Normally no questions from this one, unit one. But the batch costing is something important. Now what happens in a batch costing? You produce the goods in a batch. Sir, what examples, what items are seen in a batch production? Beta, the best example can be a biscuit, okay, pen, okay, pens industry, okay, writing pen basically. So pens are there, biscuits are there. They are always produced in batches. Nobody produce one packet. They are always produced in batches. Now, with every batch, understand how will you calculate the cost per unit. So you will take the cost of that entire batch, all the direct and indirect expenses of that entire batch, divided by the quantity produced in that batch. So you'll get the cost per unit of that item in that batch. Okay, it's very simple. Basically, what you will do, how you will find the cost per unit? Take the total of all expenses of that batch, divide by the quantities produced in that batch, and you will get the cost per unit. Okay, it's very simple. Now, students, with every batch, there is a question: how much should be the batch size? Because you can produce a very high quantity of the batch, means the batch quantity will be like 10,000 units, 50,000 units. Like the batch size can be from anything to anything, and similarly, the batch size can be very low also. It is up to you which one you have to make. The batch size can be very high or can be very low. Now, there are two costs associated with that. If you prepare very big batches, so setup cost will be very low because you will have to set up 1 or 2 times or maybe 5 times like that. But since you are producing a lot of units, you must have to hold them. So inventory holding cost, storage cost, interest cost will shoot up like anything. Excuse me. On the other hand, if you produce very small batches, so the storage cost, the interest cost will be very low. But because the batch size is very low, you will have to keep on setting up of the machine every day, every time, okay, which will involve the setup cost. Now, setup is again a challenging thing for any entity. It's not easy. Okay, remember, it entails a lot of cost. So one way or the other, if I try to reduce the number of batches, my carrying cost increases. If I wish to reduce the carrying cost, I must increase the number of batches. So somewhere I have to maintain a balance where the total of the setup and the holding cost will be the minimum. So I have to make sure that I produce this so much quantity that my total of the setup and the holding cost will be minimum. Don't you think it is exactly similar to the kind of EOQ, to the concept of EOQ which we have studied in the materials chapter? Similarly, here the concept is of economic batch quantity. There it was economic order size. Now we are having economic batch quantity. See this, as you can see, the cost of setup will be very high if I produce only small units. So carrying cost will be very minimum. But if I produce a large number of quantities, so carrying cost will be high, but the setup cost will be very low. Okay, the setup cost will be very low. I have to maintain a balance. I have to maintain a balance where the total of the carrying and the setup cost is minimum. Remember, at EBQ level, at economic batch quantity, the setup cost is not minimum, the carrying cost is not minimum, but the total of the setup and carrying cost is the minimum. Okay, the total of the setup and the carrying cost is minimum at the EBQ level. Sir, is there any speciality? Yes, the way we have seen in EOQ, similarly here also at the economic batch quantity level, ordering, you can say carrying cost will be equal to the setup cost. The formula is root of 2ds upon c. D stands for annual demand, S stands for setup cost per batch, C stands for carrying cost per unit of production, okay, per annum. Remember, D annual demand, S setup cost per batch, and C is the carrying cost per unit of production. Formula is root of 2ds upon c. So economic batch quantity is the quantity where the total of the setup and the carrying cost will always be the minimum. Now students, come to the module. We'll solve a problem based on this, okay, EBQs and all that. Come, let's solve a problem. We have already done this, right? So coming to the second module, see this. Let us do this question. Question number 3. X Limited is committed to supply 24,000 bearings per annum to Y Limited on a steady basis. So per annum I have to supply 24,000 bearings. It is estimated that it costs 10 paisa inventory holding cost per bearing per month. Setup cost per run of bearing manufacture is rupees 324. Compute the what would be the optimum size for bearing manufacture. So basically you have to calculate the optimum run size. The most optimum run size is nothing but the economic batch quantity. Use the formula for economic batch quantity. What is the formula? The formula is very simple. The formula is EBQ is equal to root of 2ds upon C. Sir, what is D in this? D stands for annual demand, which is 24,000 bearing. D is 24,000. Sir, what is setup cost? What is setup cost? Setup cost is, beta setup cost has been given 324, right? Setup cost is 324 rupees. What is the carrying cost? So carrying cost also they have given 10 paisa per bearing per month. So what will you take carrying cost? But I don't have to take it for per month basis. I want the carrying cost per unit per annum, right? So 10 paisa into 12 months, which is equal to 1 rupees 20 paisa. 1 rupees 20 paisa. Why is this pen giving so much problem? I don't understand. And this is happening in only our lecture. Still, I don't understand why it is happening only in our lectures. Normally, it does not happen. Okay, carrying cost is coming 1 rupee 20 paisa. So I've got the demand, I've got the S, I've got the C. Now use the formula and get me the value of EBQ. Come on, guys, get me the value of EBQ. Root of 2ds upon C. Come on, everyone, calculate. Tanmitha, Avisha, Malika, it is correct. Priya, Bharat, Srujan, Tanushri, Siddhesh, all of you, your answers are correct. The answer is 3,600 units. Okay, the answer will be 3,600 units. Answer will be 3,600 units. 3,600 units. If I try to put it over there, if I try to put all the values, 2 into 24, I'll write it over here if you want. 2 into 24,000 into 324 divided by 1 rupees 20 paisa. If you solve this, you will get 3,600 quantity, right? You will get 3,600 quantity. Now, once we have got this 3,600 quantity, after that, what we have to do is they have asked you, assume that the company has a policy of manufacturing 6,000 bearings per run. Okay, so we have a policy of manufacturing 6,000 bearings per run. Calculate how much extra cost the company would be incurring as compared to option A run suggested in A above. So we have the policy of manufacturing 6,000 bearings. What is the economic bearing? What is the economic batch quantity? It is coming only 3,600. It means that if I produce at 3,600, my cost is going to be minimum. If I produce at 3,600, my cost will be minimum. But I'm not producing at 3,600. I'm producing something else. Okay, I'm producing 6,000. So the cost will be definitely higher, right? So how much extra cost I'm going to incur? I'll have to make up a chart, a similar chart which we used to make in EOQ also. Okay, so let us make this chart. Let us make this chart. So I'll require 3 columns. Okay, I'll require 3 columns. How do I name them? First, EBQ, that is the economic batch quantity. And the second one is company's policy of 6,000 bearings. Company policy. Company policy. Now, first, how much is the annual demand? How much is the annual demand? Now, what is the annual demand? 24,000, 24,000. Right? What is the batch size? Batch size. When I'm producing EBQ, my batch size is 3600. And what is the company's policy? Company's policy is to produce 6,000 bearings per annum. Company's policy is to produce 6,000 bearings per annum. Now, number of setups. Setups. How I find number of setups? Basically, EBQ divided by batch size. So 24,000 divided by 3600, it is coming 6.667. So I'll write 6.667, or I can write 7 batches also. Both of them are acceptable. Remember, 6.66 also, if you write, that is also acceptable. And 24,000 divided by 6,000, the answer will come obviously 4 batches. I'll require only 4 batches. Annual demand upon batch size. So what will be the setup cost now? What will be the setup cost? What will be the setup cost? So setup cost, I know per setup I require 324 rupees, right? Per setup I require 324 rupees. So 7 into 324, the answer will be 2268, 2268, and 4 into 324, that is 1296. Okay, 1296. That's the company's policy. If I would have taken it in decimals, then what would have happened? If I would have taken 6.667, if I would have taken 6.667, then what would have happened? 324 into 6.666666, it would have been 2160. If I would have written it in decimals, right, number of setups 6.667, then my answer would have been 2160. Remember that. So can we write in decimals? Yes, better. You can write in decimals also. That is also acceptable. Next, I've got my setup cost. I want the carrying cost. For carrying cost, the first thing which you should calculate is the average inventory. Sir, in this also we have to calculate average inventory. Yes, the way we calculated for that EOQ questions, okay, same way we have to calculate average inventory. When I was taking the revision, some of you also have asked me why we have to take average inventory as half of the order size. I told you, like for example, if there is 30,000 quantity in the opening and in the closing I'll have 0 quantity. So on an average, I'll be having 15,000 quantity. On one day, 29,000, on one day, 1,000. So average is 15,000, like that. Similarly, here average inventory, what will be average inventory? Whatever is your batch size, take the half of that. There what the formula was, half of the order size. Here the formula is half of the batch size. Okay. So 3600 is my batch size. Half of it is 1800 is my average inventory. Similarly, for 6,000, my average inventory will be 3,000. My average inventory will be 3,000. Now, students, what will be my carrying cost? Carrying cost Now for my carrying cost will be very simple. I know for 1 unit I have to spend 1 rupee 20 paisa. I have already calculated that. For 1 unit I must spend 1 rupee 20 paisa. So for 1800 units, 1800 into 1.2, that will be 2160. That will be 2160. So carrying cost will be 1800 into 1.2, 2160. And similarly for 3000, it will be 3000 into 1.2, that is 3160. Students, haven't you, I told you that the setup cost and the carrying cost are always the same at the EBQ level. Okay. So setup cost and carrying cost are the same at EBQ level. Now take the total cost. Now, because I have taken for 7 orders, I'll take this total of setup and carrying. So 2268 plus 2160, that is 4428, 1296 and 3160. So that is 4456, right? 44 and 56. So how much is the extra cost I'm spending? Okay, I think I've made some error over here. Just a second. It will be, yes, 3600. Yes, it will be 3600. I think I have written by mistake 2160, by mistake I written 3160. So over here it will be 3600. So I'll just improvise on this. So 3600 plus 1296. So that is 4896. And what is the extra cost the company has to incur? Now, extra cost that the company has to incur. Yes, all of you, those who have told me, that's absolutely perfect. Extra cost. So take the gap. That is 460. Because of the company's current policy, we have to spend an extra money of 468 rupees. Everybody clear? Coming 576. If you go by 2160, I think it will come this thing. Yeah. Shikha, if you use 2160 and 2160, then your answer will come 576. What I have done is I have assumed 7 setups. So I have taken the setup cost for 7 setups, right? So that is 2268. Okay, so there is a difference because of that rounding off. Understood, Shikha? There's a difference because of that rounding off. I have taken for 7 setups, so my cost was 2268 for setup. So total cost was coming 4428. This and this. The total cost was coming 4428. And if I compare this to, I get 468. If you take 2160 and 2160, then your total cost is coming somewhere like 4320. And then if you take the gap, your gap will be 576, which is absolutely perfect. Excuse me. Chali, let's move ahead. Everybody clear with this question, this EBQ and all that? The formula root 2ds upon C, 2 into annual demand into setup cost per setup, divide by the carrying cost per unit per annum. Simple as that. At the EBQ, the both the ordering and the setup and the carrying cost is always the same. Next. So similar questions are there. Okay. Similar questions are there. Now students, there's one question you can see over here of this Rio Limited. Come to this question. I am not going to solve the entire question. I just want to teach you with respect to the overheads, because many students don't understand how to calculate overheads. Okay, so I just want to teach that, because a similar question actually was asked in an exam. Okay, a similar question was asked in a recent exam. That is why I'm going to teach you that. Okay, how you calculate the overheads. Let's read the question. Rio Limited undertakes to supply 100 units of a component per month for the months of Jan, Feb and March. So 100 units we have to supply. Every month a batch order is opened against which material and labor cost are booked at actuals. Okay. So every month a batch order is opened and material and labor are booked at actuals. Overheads are levied at a rate per labor hour. So he has told you that overheads will be levied at the rate per labor hour. हर एक घंटे के हिसाब से ओवरहेड आप करेंगे पर लेबर आवर के हिसाब से. Selling price is contracted at 15 rupees per unit. Calculate the profit per unit of each batch and the overall position for the order of 3000 units. आपको हर बैच का प्रॉफिट निकालना है एंड पूरे 3000 यूनिट्स का भी निकालना है. Students, see the data they have given. Now see the data they have given. For the month of January, February and March, they have given the batch output 1250, 1500 and 1000. They have given the material cost for that. They have given the labor cost for that. Material is given, labor cost is given. They have given the batch quantity also. Labor is paid at the rate of 2 per hour. For other details, January, February, March, they have given the total overheads and total labor hours. Okay, they have given the total overheads and total labor hours. Students, if I have to calculate my total cost for the month of January for this particular order, it means for this particular batch, if I have to calculate my total cost, I'll require three things: material, labor, overheads, right? Material is given, labor is given for this batch. I just want you to calculate overheads for this batch. Okay, that is where the challenge is. I want to calculate the total cost of the batch for the batch of January, basically. Okay, for the month of January. So for month of January, I want the total cost. Material is given, labor is given for that batch, but the problem is overhead for the batch is not given. Sir, there is given overhead. Beta, this overhead is for the entire month, not for only one batch. This is for 4,000 hours. And in our batch, we have not spent 4,000 hours. In our batch, we have not spent 4,000 hours. So this is for the entire factory. This is for the entire factory, 12,000 overheads for 4,000 hours. I want you to calculate and tell me what will be the overheads for this batch. Now, how to calculate that? That is the challenge. How to calculate that? That is the challenge. So that's only thing that you should understand and that I'm going to teach you. Students, now, can you tell me, labor is paid at the rate of 2 per hour. Labor is paid at the rate of 2 per hour. And labor cost is 2,500 rupees for the month of January. How many hours the work has been done? How many labor hours? Come on, calculate. 2,500 rupees is the cost for labor and labor is paid at the rupees of 2 per hour. So how many hours work has been done on this batch? Come on. How many hours the work was done on this batch? 2,500 was the labor cost and 2 rupees is the cost per hour. So obviously you will divide and you will calculate, sir, we should have worked for 1250 hours. We should have worked for 1250 hours. Avisha, it is correct. Shriyaksha, it is correct. Abhijit, you have made a small error. Understand, students, for yes, perfect. So students, labor cost is 2,500 rupees and we are paying labor at the rupees 2 per hour. Okay, so we have paid for 1,250 hours. We have paid for 1,250 hours. Perfect. Okay, aspirant Shikha, Abhijit, Sanmita, Vaishnavi, Shreya, Sanmita, Srujan, Siddesh, everybody is correct. So 1250 hours. Now students, we have got the number of hours for the month of January. For this batch, okay, for this batch, we have got the number of hours. Now see the data. in the month of January, 12,000 was the overhead. 12,000 was the overhead and labor hours were 4,000. Okay, Abhijit, you have already calculated rupees earlier when you have given me the answer. Fantastic. 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 Very good. So January 12,000 was the overhead and 4,000 labor hours were done in the factory. So can you calculate what is the overhead per hour for the month of January? See this, in the month of January, our overheads were 12,000 and hours were 4,000. Okay, in the month of January, our overheads were 12,000 and hours were 4,000. So doesn't it mean that per hour we are spending 3 rupees on overheads? Right? In the entire month of January, see, this is the data for the entire factory. Okay, for entire factory, overheads were 12,000 for 4,000 labor hours. It means that per hour, our overhead is coming 3 rupees. Okay, for per hour, it was coming 3 rupees. I hope you have understood. For 1 hour, the overhead is coming 3 rupees. Okay, so for 1 hour, the overhead is coming 3 rupees. Now, we have seen that for the month of January, for this batch, the hours were 1250. Now, can you calculate what should be the overhead to be allocated to this batch? What should be the overhead that should be allocated to that batch? Come on, calculate it. What should be the overhead that should be allocated to this batch? Perfect. Srujan, Samita. We have calculated that per hour there will be 3 rupees as the overhead. So for 1250 hours, 1250 into 3 rupees, it is going to be 3750 rupees. Perfect. Perfect. Everybody, your answers are correct. Okay, answers are correct. Absolutely perfect. Now, the same way, guys, calculate for the month of February. Go for it. February, calculate for the month of February. Come on, I'm waiting for your answers. They have given you the February labor cost. They have given you the February overheads and the labor hours. Calculate for the month of February how much is the overheads. Calculate for the February month how much is the overheads. For the month of February, calculate how much is the overheads. Okay, I've got 3 answers. Mallika, Shridaksha, Shreya. Very good. Very, very good. All of you, your answers are correct. Fantastic. Fantastic. So Abhijit, Samita, Avisha, Shiva Karthik, Vaishnavi, Bharat, Srujan, Arya, your answers are correct. So I'll repeat the procedure again. The procedure is very simple. Okay, I divide the overheads by the hours. I get 2 rupee per hour. Okay, 2 rupee per hour. And for 3,000 cost, we have paid them at the rate of 2 per hour. So 3,000 divided by 2, it will be how much? 1,500 hours. So I've got the hours which are 1,500 and the rate I've got 2. So 1,500 into 2, the cost will be 3,000 rupees. The cost will be 3,000 rupees. Perfect. Perfect. Shikha, Tanushri, Samita, perfect. Okay, let's go ahead. This is all from this chapter. Okay, let's proceed to the next chapter. Now, the next topic is job costing and the contract costing. Okay, wait a minute, we'll start. Chalo. Do keep on liking the video. Do keep on sharing. Okay, if you like, right? Chalo. Job costing, contract costing. Now, job costing and contract costing. See, first of all, the first part is job costing. Now, what is job costing? Now, what is job costing? Let me tell you that. What is job costing? In job costing, what happens is you get some specific orders. You get some specific job orders. Like for example, a furniture makers, right? A sofa maker, a car repair shops. The jobs are specific. Every job is going to be different. Okay, every job is going to be different. Like printing, furniture, hardware, shipbuilding, heavy machinery, interior decorations, every like that. Every job is going to be different. Okay, so that is where we actually apply job costing. How you do this job costing? So you'll make up a job cost sheet. You will find whatever is the cost related to your job. Okay, you'll just put it over there. Okay, you'll take the totals of that. You'll take the totals of that, and once you have taken the total of that, okay, once you have taken the total of that, what you will do is you will simply charge it to that you after adding a profit. Okay, so take all the cost, add it up, just add your profit margin, done. Right, see, a similar example has been given for job cost sheet. We will estimate how much is the materials required, how much is the wages, how much is the production cost. We'll add the total cost, we'll expected margin, will add, and we'll get the selling prices. So this is what happens in a job cost sheet. Okay, job costing basically. Job costing is not relevant for us. Okay, in this chapter what is more relevant for us is the contract costing. तो all know job costing में क्या होता है, एक आपको सीधा सीधा डेटा दे दिया जाएगा. You will make a simple cost sheet. I know this is not difficult for you. You'll just make a simple cost sheet for that. What is challenging will be the contract costing. Okay, so that is what we have to actually revise. Now in this one, spoiled and defective works have been given. Okay, earlier also it was given, right? In the previous one, when we were doing this batch costing, okay, when we were doing this batch costing, have you seen that there we have done this spoiled and defective work? Okay, normal and abnormal reasons, where we were rectifying that. Now here also spoiled and defective work is given. Okay, so if it is allowed, the treatment is more or less the same. If it is normal, just add it to the production cost, inflate the good units. If it is abnormal, transfer to costing P&L. Simple as that. Okay, that's the only rule. Okay, if it is abnormal, costing P&L. If it is normal, increase the cost of the other goods. Done. Okay. Next, there are some entries given. Now entries we have already done. Jobs are actually part of the work in process. If you are issuing any materials to any specific job, you are actually debiting the work in process account. Okay, if I specifically talk about the head under the work in process account, then you will use, like for example, I'm transferring materials to job 1. I'll debit job 1 account debit, like that. Okay, or I may say WIP account in brackets job 1 account debit, like that. I can write like this. Next, so job costing, this is all basics of job costing. In job costing there is nothing. I can show you an example for job costing. Let me show it to you on this one. Not a proper example which I wanted to show. Anyways, see this job wise data have been given. You have to just add it up and find the cost of the respective jobs. Okay, so these are not difficult questions, these are just easy questions. What our challenge will be the contract costing part. Okay, in fact what you can do is you can try out a particular question. Okay, if you face any difficulty, you can get in touch with me personally. Okay, on that. Yesterday also some of you I think was asking a particular query, but he or she had not connected with me personally to ask that particular doubt. Okay, so I'll repeat again, if you face any difficulties, if you face any problems, if you're not understanding any particular question, you can always get in touch with me. Okay, not a problem, you can always get in touch with me. Now students, coming to the contract costing. Now what are contract costing and how is it different from job costing? First of all, do understand that contracts are actually jobs only, but these are the jobs of big duration. Contracts are nothing but jobs, but they are actually jobs of a bigger duration. Like you can have jobs for 1 year, 3 years, 2 years, like that. Like for example, I give you a job, I give you a contract, please construct a building for us. Okay, so construct a building and this kind of contract, or construction of a dam, construction of roads, bridge. Okay, so do this kind of work for us. So this is where contract costing will apply. Okay, this is where contract costing will apply. Understand this. So I'm telling you to construct something for me. Okay, this will take a lot of time. First of all, it is a job, but this job is of a very long duration, and there's one more speciality. You know what happens is, if suppose your bicycle gets it's not working properly, you will go to the bicycle repair shop, right? Similarly, if you want to manufacture a sofa, what you will do is you will go to the sofa manufacturer. Okay, you will ask him to make the sofa. In job costing, normally the job works happen at their respective places only. Okay, at the place of the person performing the job. But in contract costing, suppose I tell you that construct a building for me, it is not going to happen. You will construct the building at your place and just bring it and install at my place. That's not going to happen. You will have to perform the work at my allotted place only. Okay, so this is again a part which is more different, which is slightly different from job costing. The work happens normally at the customer's place, at the contractee's place. Now, there are some terms which will be used in contract costing chapter, especially the terms which normally confuse the students. They are that work certified, work uncertified, cost of work certified, value of work certified, cost of work uncertified, and all that, these things. Now, I'll tell you something what happens. See, the bigger challenge in this chapter, what happens is, suppose I give you a contract. Now, suppose you are the contractor and I'm the contractee. This chapter is from your eyes. Remember, you are the contractor, I am the contractee. I have given you a contract, construct a building for me. First, understand the applicability. I am the customer, I am the client, I am giving you a contract, do construct a building for me. Simple. Do construct a building for me. Now, you are the contractor, you have received the contract. This chapter is from your perspective, from the contractor's perspective. Second, the contractor does this work over a period of years, like 2 years, 3 years, and so on. It cannot happen that he book the entire profit in the third year when the contract will be complete. What happens is, he tries to book the profit every year somewhat. Like if suppose, for example, the contract is of 3 years and every year the work will be performed equally and you are going to get a profit of 30 lakhs out of it. Okay, so it is well logical also that every year you book a profit of 10 lakhs. Right? Every year same work is getting performed, so 10 lakhs you should book as a profit. That goes well in line with accounting standard number 7 also. AS7 also allows for percentage of completion method. So understand this. In contract costing, what happens is the profit will be generated over a period of years. Okay, over a period of years. So you should not book the profit entirely after the completion of contract. You should book it over the period of completion. And this is where this chapter comes into picture, like how much profits to book in the current year. How much profits to book in the current year and for what profits we should not book. This is where the chapter is actually applicable. Now for this, how much profits do we have to record? How much profits do we have to book? Is we have these terms. First of all, the work certified. Now what do you mean by work certified? Students, for example, you are constructing the building for me. Okay, now what happens is, you are located, suppose you are located in, let's say, Mangalore. Okay, and I am you are located in, suppose not Mangalore. Okay, so you are located in, let's say, Mumbai. I have a plot in Mumbai. Okay, and you are constructing a building over there, but I don't stay in Mumbai. Okay, I don't stay in Mumbai. You are staying in Mumbai, my plot is also there in Mumbai, and you are constructing a building on that particular plot. Okay, but I don't stay in Mumbai. Okay, so what happens is, you will keep on constructing and you will keep on generating bills on me. Okay, you will keep on asking for money. Please send money, we'll have to construct. Please send money, this and that. What happens is, I don't trust you. A contractee never trusts the contractor directly. So if the contractor is constructing a building, what the contractor tells him, you go and take a certificate from the architect. You bring a certificate from the architect, or you bring a certificate from the architects which we will suggest. You bring a certificate from those specific architects or maybe engineers that yes, you have completed 10% contract, you have completed 30% contract. So you will get those certificates. The contractor will get those certificates and submit it to the contractee. On the basis of those certificates, I will pay you money. On the basis of that certificates, you will make a bill on me and I'll pay you money on that. Okay, for the work which you have done and you have not you have not got a certificate for that, I'm not going to pay it for you. I'm not going to pay for that. So understand, the amount, the percentage for which you are getting the certificate is called as work certified. Okay, suppose for example it is a 100 floors building, let's say 98 floors and 2 ground floors for parking and all that. Okay, so it's a 100-floor building, and this time you have created from ground and parking, you have created 10 floors. Okay, so in that case 10% of the job has been done. You will go to the architect, yes, 10% of the job is done. So architect will certify, yes, you have constructed that, the building is of a good quality. So he will give you a certificate for 10%. On the basis of that certificate, suppose our contract was for 50 lakhs. So 50 lakhs, 10%, you have got the work certified. Okay, so you will make a bill for 5 lakh rupees on me. This is how it works. This is how it works. Okay, now I'll slightly go into the details of the example which I have given. Suppose the building is 100 floors. The building is 100 floors. Okay, and you have done 10% work. You have done how much work? You have done 10% work. Now, since you have done 10% work, the contract price is 50 lakh. Okay, you have incurred a cost. You have incurred a cost of, let's say, 3.5 lakhs. Okay, while constructing this 10%, you have incurred a cost of 3.5 lakhs. The contract price was for 50 lakhs. You have completed 10% work. You have got this certified. So you will make a invoice on the customer for 10% of the contract price, which is 50 lakhs. So you'll raise an invoice for 10% of 50 lakhs, which is 5 lakhs basically. So value of work certified is 5 lakhs, and see, this is the value of the work which is certified. This is the sell price of the work which is certified. So work certified is 10%. So contract price is 50 lakh. The sell price of 10% is 5 lakhs. So the value of work certified is 5 lakhs. The value of work certified is 5 lakh. And how much you spent to make that building? You have spent till now 3.5 lakh rupees. This is the cost of work certified. This is what? This is cost of work certified. Okay, so remember that. Okay, this is cost of work certified, and this is the value of work certified. Everybody understood this? Everybody, have you understood this? Contract price, you have got a certificate of 10%. For this 10%, the sell price is the value, which is 5 lakh rupees, 10% of 50 lakhs. Okay, this is the value of work certified. And for doing this work, you spent 3.5 lakh rupees. Okay, now this is called as cost of work. This is called as cost of work certified. Cost of work certified. Okay, which is 3.5 lakhs. Everybody clear till now? Now, if you have any queries, please ask. Okay. Now, what happens is, after you got the certificate, the construction is not going to stop. Okay. Suppose you got the certificate on 20th of March. You got the certificate on 20th of March 23, let's say. Okay, you got the certificate on 20th on March 23. Now you will not stop the work for the remaining 11 days of the year, of the financial year. You're not going to stop the work. So what happens is the work was going on, and in the next 11 days from 21st March to 31st March, you have worked. There was some network problem, I feel, for a second. Okay. So students, we were discussing, like, on 20th of March, you got the certificate, right? On 20th of March, you got a certificate. Okay. You got the work certified. Now, what happened is after 20th of March, the work did not stop. You were continuing with the work. And for the remaining 11 days, you did work and you spent rupees 2 lakh on that. Okay. You spent rupees 2 lakh on that. We will call this as the cost of work uncertified. What do you call it as? Cost of work uncertified, which is 2 lakh rupees in this particular case. Okay, which is 2 lakh rupees in this particular case. Now understand this, there is one concept called as notional profit. Notional profit. For this notional profit, what you have to do is you always calculate value of work certified, which was already calculated above, minus cost of work certified. Minus cost of work certified. Minus cost of work certified. So notional profit is basically cost of work which has been certified by the architect minus the cost of value of the work which has been certified by the architect minus the cost for that particular work certified. This is the notional profit. In our example, notional profit will be how much? Basically 5 lakh is the value of work which has been certified, and the cost of the work for that certified part is 3.5 lakh rupees. So in our example, notional profit will be 5 lakhs minus 3.5 lakh. It is going to be 1.5 lakhs. It is 1.5 lakhs. Okay, have you all understood this concept? So whenever we calculate actually the notional profit, we never consider the work uncertified. We never consider the work uncertified. Okay, so remember in this one, whenever you have to calculate the profits, whenever you have to calculate the notional profits, you always look for the value of work certified and the cost of work certified. You always look the value of work certified and the cost of work which is certified. Any doubts, any queries till now? Yes, students, any doubts, any queries till now? Okay, chalo, I think I can proceed ahead. So we have seen the concept of work certified, basically for which you have got the certificate. There are two concepts for work certified. Always remember, there are two concepts for work certified. One is the cost for that work certified, and second is the sell price of the work which has been certified. The sell price is called as the value. We call it as the value of the work certified. It is basically the sell price of that contract. Okay. Okay, now I have got a request to calculate, to explain the work uncertified. Okay, I'll explain it again, don't worry. So understand, I'll explain it again, okay, in a minute, Bharat. So see, first of all, for whatever thing you have got the certificate, that is called as the work certified. Like for if you got the certificate, we call it as the work certified. Now for every work certified, you calculate two things. One is its cost and second is the value. वन इज इट्स कॉस्ट, कितना लगा उसको बनाने के लिए, और उसका सेल प्राइस क्या है. सेल प्राइस मतलब यहाँ पे वैल्यू होता है. बेसिकली वी हैव गॉट द सर्टिफिकेट फॉर 10%. कॉन्ट्रैक्ट हमारा 50 लाख का था, तो 50 लाख का 10% 5 लाख उसका वैल्यू है. ओके, सो 5 लाख उसका सेल प्राइस या वैल्यू है. ओके, सो वैल्यू ऑफ वर्क सर्टिफाइड minus the cost of the work certified is what is notional profit. Okay, is what? Notional profit. Now, अब मैं आता हूं वर्क अनसर्टिफाइड पे. Work uncertified is something basically you are doing the work, but you have not got a certificate for that. Right? You have done the work, but you have not got a certificate. That is nothing but work uncertified. Remember that. Done the work, not got a certificate. Now, so because you have not got a certificate, you cannot raise an invoice, and that is why we never calculate the value of work uncertified. Remember, because we have not got a certificate, we cannot raise a bill on the customer. Okay, so he is not going to pay us for that. That is why we always measure the work uncertified, the work which has been done, but we have not received the certificate for that. Okay, so for this work, we always measure it at a cost price. We can never book profit on the work which has not been certified yet. Bharat, is it clear? I've got one more query over here. Cost of work to date. That's a beautiful query. Okay. In fact, that was a concept which I was going to take afterwards. Okay. Cost of work to date. I'm glad you brought this concept over here. Cost of work to date. It means that the entire cost what you have done till today, maybe it got certified, maybe it did not get certified. But cost of work till date means the entire cost what we have done till today. Maybe it had got certified, maybe it hadn't got certified. जैसे फॉर एग्जाम्पल स्टूडेंट्स, इन दिस पर्टिकुलर क्वेश्चन, जो ये मैंने जो एग्जाम्पल आपको दिया है, क्या आप मुझे बता सकते हैं मेरा टोटल कॉस्ट कितना हुआ है? कॉस्ट ऑफ वर्क टिल डेट, cost of work till date. Can you tell me how much have I spent on the contract till now? Maybe certified, maybe uncertified, but how much is the amount I have spent on the contract till now? Yes, students, how much is the amount that I have spent on the contract till now? The answer comes with slight lag, right? Okay, yes, very good, Sdesh. Perfect. This is what is cost of work till date, right? This is what cost of work till date is. Absolutely perfect. Srujan, Arya, Srujan, you made an error. Check again. Arya, Kirti, Shreya, Samitha, your answers are correct. See, I have spent 3.5 lakh for the work which has got certified, and I had spent 2 lakh for the work which is uncertified. So in all, I have spent 5.5 lakh rupees. In all, I have spent 5.5 lakh rupees is cost of work till date. Okay. So cost of work till date, the formula will be cost of work certified plus cost of work uncertified. Okay, cost of work certified plus cost of work uncertified will give you the total cost of work till date. Now, what happens sometimes in questions, you will be given this, you will be given this, and you can easily calculate this. From this, subtract the cost of work uncertified, you get the cost of work certified. Sometimes you will be given cost of work till date, you will be given cost of work certified. You can easily calculate this one. Okay, so remember, this is a formula. These are all formulas, in fact. Notional profit, cost of work till date. Okay, these are all relevant formulas for us. Now, the third concept is estimated profit. Estimated profit. Now, sir, we have already seen notional profit. Notional profit is a different concept. Estimated profit is a different concept. Notional profit generally tells you annual profit. What notional profit tell you is annual profit. On an average, every year, how much you have to book. This is what will be told by the notional profits. But estimated profit tells you the total profits of the contract. So notional profit generally tells you the profit to be recognized in the current year. But estimated profit actually tells you how much profit you have to book on the entire contract, or maybe 2 years, 3 years, like what all is the duration. So what is the total profit that's going to be? Okay, that is being told by the estimated profits. नाउ अभी इसमें आपको क्या ध्यान रखना है, तो एस्टिमेटेड प्रॉफिट में आपको टोटल प्रॉफिट मिलता है 2-3 साल का मिलकर. नोशनल प्रॉफिट में आपको जनरली सालाना प्रॉफिट मिलता है, वैल्यू ऑफ वर्क सर्टिफाइड माइनस कॉस्ट ऑफ वर्क अनसर्टिफाइड. और इसमें भी अगर आपने पहले से ही कुछ प्रॉफिट बुक कर रखा है तो आप सब्ट्रैक्ट कर सकते हैं टू गेट द प्रॉफिट फॉर द करंट ईयर. तो एस्टिमेटेड प्रॉफिट कैसे निकलेगा, हाउ विल कैलकुलेट द एस्टिमेटेड प्रॉफिट. सो कॉन्ट्रैक्ट प्राइस में से दो चीजें हटानी है. कॉन्ट्रैक्ट प्राइस में से दो चीजें हटानी है. कौन कौन सी? कॉन्ट्रैक्ट प्राइस, व्हाट इज कॉन्ट्रैक्ट प्राइस? योर एंटायर रेवेन्यू, आपकी पूरी कमाई कॉन्ट्रैक्ट प्राइस है. इसमें से दो चीजें हटा दीजिए. कॉस्ट टिल डेट, आज तक का जितना खर्चा हुआ है, वर्क सर्टिफाइड एंड अनसर्टिफाइड, आज तक जितना खर्चा हुआ वो हटा दीजिए. एस्टिमेटेड फर्दर एक्सपेंडिचर, फर्दर एक्सपेंस टू कंप्लीट द कॉन्ट्रैक्ट. सो कॉन्ट्रैक्ट प्राइस में से दो चीजें आपको कम करनी है. आज तक का जो खर्चा हो गया एंड एस्टिमेटेड फर्दर एक्सपेंडिचर टू कंप्लीट द कॉन्ट्रैक्ट. यू रिड्यूस दिस टू आइटम्स, you will get the estimated profits. Friends, you can note down this formulas. Okay, these are very important ones. Okay, chalo, perfect. We have discussed all the concepts now. There are some small concepts like progress payments, small payments receiving over the tenure of the contract, right? Small payments what you keep on receiving is the nothing but the what do you say, progress payments. Okay, retention money, what is retention money? Suppose we have raised a bill of 1 crore, but they have paid us only 90 lakhs, so 10 lakhs they have kept with them for safety. So 1 crore is the value of work certified and 90 lakh is only what they have paid us. So they have kept 10 lakh for safety. So that is nothing but the retention money. That is nothing but the retention money. These concepts are actually of hardly any relevance for us. Now, let's see this formula. Value of work certified is equal to value of contract into work certified. Now, what is this? Value of work certified, which is value of contract into work certified, like the way we did in an exam. In our example, 50 lakh was the value of the contract, and value of work certified was 10%. So 50 lakh into 10%, it was 5 lakh. That was the value of work certified. Okay, that was the value of work certified. Now, this cost of work till date, cost of work certified is cost of work till date minus cost of work uncertified plus material in hand and plant at site. What we have normally written over here is after netting off everything. Okay, after netting off everything. Now, what we have already net off, we have considered only the net of materials and net of plant. Okay, plant is basically, we always calculate the depreciation for that. We'll be seeing that in the example, so that will get clear over there. Now, students, this is the contract. I think the battery of this has got over. Wait, 1 minute. Are you able to hear me now? Are you able to hear me now? जो माइक था ना बेटा, माइक का बैटरी खत्म हो गया था. ओके ओके, सो अब आप कहां तक सुने और कहां तक नहीं मुझे नहीं पता. Shall I repeat the entire contract account? Shall I repeat the entire contract account or where shall I start from? Okay, I'll repeat the entire contract account then. Okay, so contract account, remember, in a contract account, what happens is on the debit side, I'll have all the expenses, material, wages, and direct expense, indirect expense, plant and machine, cost of subcontract, and costing, like this kind of a trading account. Remember, this contract account is nothing but kind of a trading account. In trading account, what happens is I write all the expense on the debit side, right? So material, wages, direct expense to any machine bought and everything, subcontracting, all the expenses I am writing on the debit. On the credit, I'll write two things. This is kind of a trading account. So on the credit side, I'll write two things. What are the two things I have to write? First, I must write the sales. And second, I must write the closing stocks. Sir, what is sales in contract account? For whatever we have got the certificate. We have got the certificate for the work certified portion, right? We have got the certificate. So for that certificate, we'll raise a bill, right? So that is our sales. Okay, so we always write work certified's value. Okay, we always write the value of work certified. So fix this in your mind. Whenever you are making a credit account, contract account, on the credit side, we'll write value of work certified. Why value? Because that represent our sales. Okay, so whenever I'm making a contract account, on the credit side, I'll write value of work certified. That is my sales. Similarly, now I have to write the sales and the closing stocks. Sir, what are the closing stocks? See, when you are preparing a contract account, when you are doing a contract, there are some materials which are there at the year end. There is a plant which is there at the year end. Okay, there is some closing value for that. And also, you have constructed some building after getting the certificate also. That is the cost of the work uncertified, for which we have not got the sales value, for which we have not got the uh, certificate, that it is being certified. So the work which has been done after getting the certificate, okay, after getting the certificate, what work we are continuously doing, that cost will be treated as a closing stock. So always remember, we have to take in the closing stocks material at site, plant at site, and the cost of work which is uncertified. Okay, so for uncertified, always we have to find the cost. So for work uncertified, we always have to find the cost. We never find value for work uncertified. Okay, we always find the value for work certified. This is our sales. I hope it is clear for everyone now. Now there are two types of contracts also: cost plus contract and fixed price contract. Cost plus contract is basically where the contractor will reimburse all the contract cost plus a certain amount of profit. Then you have the fixed price contracts where the contract price is already fixed. Fixed price contracts are generally subject to an escalation clause. I'll do one thing now. I'll take up an example first, okay? And after doing that example, We will discuss the escalation clause. Okay, we'll discuss the escalation clause. So students, let's take up an example first. See this. I'm starting with a simple problem. Compute estimated profit. Now students, we want to find the estimated profit. What is the formula? If we have to find the estimated profit from the contract price, that is 37,50,000, that is my contract price, what shall I reduce? I shall reduce the total expenditure to date, that is 22,50,000, and estimated further expenditure, that is 2,50,000, which is given. This also I should reduce. Okay, we have already seen this formula, right? For estimated profit, contract price minus contract cost till date and expenditure expected further expenditure. So 3750 minus 2250 minus 2,50,000. So how much it will be? I think 12,50,000. That is nothing but our estimated profit. That is nothing but the estimated profit. I hope you have understood this. Is there any other thing? Contract price minus total expenditure till date. This is 3250. I have written by mistake 3750. So 5 lakh will get reduced, 7,50,000. Perfect. Okay, so that was a very simple question. Okay, there was a small typing mistake. Prajwal is asking me cost of work certified means. Okay, so cost of work certified, students, the work, like the construction for which you have received the certificate, whatever cost you have spent for that is the cost of work certified. Is the cost of work certified. I'll give you an example for this. Suppose, Prajwal, I'm constructing a building. Every floor cost me 5 lakh rupees. I have created floor 1, floor 2, floor 3. So I've spent 5 lakh, 5 lakh, 5 lakh. This is my cost. Okay, this is my cost. What happened is, I've spent this 15 lakhs. I brought an architect. Architect has seen this. He has given me a certificate. Yes, 3 floors are completed. He has given me a certificate. 3 floors are completed, properly completed. Okay. Now, after the architect goes, I still continue with my construction. I've created one more floor with 5 lakh rupees cost. Okay. Now understand this thing. The architect has given me a certificate for only 3 floors, but in all, I have created 4 floors. So my total cost is actually 20 lakhs, out of which 15 lakhs is the cost of work which is certified. So he has given me a certificate for only 3 floors. So for this 3 floors, the cost of work which is certified, for which I have received the certificate, was 15 lakhs. And this 5 lakh, which additional floor which I have created after the architect leaving this, okay, after the architect going, I have also created one more floor, and this 5 lakh is cost of work uncertified. आर्किटेक्ट गया, उसके बाद मैंने ये नया वाला फ्लोर बनाया था, तो उसका जो खर्चा है वो अभी तक उसका मुझे सर्टिफिकेट नहीं मिला है. दैट इज द कॉस्ट ऑफ वर्क अनसर्टिफाइड. I think, Prajwal, it should be crystal clear by now कि वर्क सर्टिफाइड की कॉस्ट क्या होती है और अनसर्टिफाइड की क्या. एंड दिस इज ओनली द कॉस्ट व्हाट वी आर टॉकिंग. हो सकता है कि इन 3 फ्लोर का जो सेल प्राइस हो, जो वैल्यू हो, मे बी 25 lakhs. दैट इज पॉसिबल. उसका सेल प्राइस कुछ भी हो सकता है. उसका सेल प्राइस कुछ भी हो सकता है. वी आर ओनली डिस्कसिंग अबाउट द कॉस्ट राइट नाउ. Now students, let's take up a question. Now I wish to take a problem where I'll teach you how to calculate the cost of work uncertified. Actually, I could have taken an easy problem which was illustration number 4. But in illustration number 4, what happens is they have already given you the cost of work uncertified. I want to teach you how to calculate the cost of work uncertified. That is why I'm taking question number 5 right now. Okay, I'm going to take question number 5. Everybody, you will also be solving it with me right away. This is a contract account. Okay, so it should be having all the columns of an account. It should be having all the columns of an account. Remember that. So there's a contract account. प्लीज आप भी इसे एक रफ में बना लीजिएगा. A contractor prepare his accounts. A contractor prepares his accounts for the year ending 31st March each year. He commenced a contract on 1st July 2020. Students, see the date. He prepares his accounts for 31st March. He has started this contract on 1st July 2020. It means that the period is 9 months. So expenses, if some expense is there, which is there going to be in months, we'll have to apportion it. Okay, remember that we'll have to kind of proportionate it. Okay, for 9 months. The following information relates to the contract as on 31st March 21. Material, wages, salary. Come on, फटाफट लिख लेंगे बेटा. Materials, wages, salary. To materials, to wages, to salary to foreman, to 51, 565, 600, 2,51,000, 565, 600, 565, 600. Then you have 81,300 salary to foreman, 81,300. That's the salary to foreman. A machine costing 2,60,000 had been on the site for 146 days. Its working life is 7 years. Its final scrap value is 15,000. Now, students, I can do two things with this. Either I can, I can do two machinery 2,60,000 and closing balance by machine at site. By machine at site, the closing balance on the credit. I can do this way also, or what I can do is I can, directly find the depreciation on the machine and write it in the debit side. I personally like the depreciation concept more. Okay, that is why I never write it like this. What I do is I directly calculate the depreciation on machinery and I'll simply write it on the debit side. Okay, I'll simply write it on the debit side. So let us calculate the depreciation machine. See, he has told you machine costing 2,60,000 has been on the site for 146 days. Its working life is 7 years and final scrap value is 15,000. Now, since the machine cost is 260 and final scrap is 15, I'll make the working note. 2,60,000 cost minus 15,000 scrap. I got the depreciable amount. Divide by this cost is for 7 years. Okay, this cost is for 7 years. If I divide this, I get the cost for 1 year. But I want the depreciation for only 146 days out of 365 days. Right? I want the depreciation for only 146 days out of 345 days. Right? Now students, do fatafat, do calculation. 260 minus 15, 2,60,000 minus 15,000. So the depreciable amount what I am getting is 2,45,000 in the numerator. Divide by 7. I got, after dividing by 7, I got 35,000 for 7 for every year. Okay, that's a depreciation into 146. Divide by 365. I got the depreciation 14,000 rupees. Have you all got and understood how I have calculated this? I've got the depreciation 14,000 rupees. Siddesh, there is some error I feel. See this 260 minus 15,000 divided by 7 years. I got the depreciation for 1 year. Okay, sir, why have you reduced this 15,000? Because we all know when you calculate this using the straight line method, cost minus depreciation we have to do. Cost minus scrap value we always have to do. So cost minus scrap upon this useful life, depreciation for 1 year into the useful days. Perfect, perfect, perfect. Samita, Arya, Shreya, Shriyaksha, Bharat, Samita, Sujan, everybody, your answers are correct. So that is 14,000. Sir, if you would have written this 2,60,000, then how would you would have written? If I would have written like this, to machine 2,60,000 over here, then I would have written by machine at site. After reducing 14,000, I would have written it like this, 2,46,000. So if you want to write like this, to machinery at site 260, by machinery at site 246, the net difference is of 14,000. You can do this way, or you can directly take the depreciation and write it. Okay, I like the depreciation part more. That is why I always prefer that. I always prefer that. Now, next. A supervisor who is paid 8,000 per month has devoted one half of his time to this contract. So supervisor is there who is paid 8,000 per month, has devoted one half of his time to the contract. Okay. So he has been paid 8,000 per month. Everybody do calculate fatafat how much will be the expense that we will charge to the contract. नाउ ये आपके लिए चैलेंज है बेटा, जल्दी से कैलकुलेट करिए कितना आएगा. टू सुपरवाइजर सैलरी कितना लिखूं मैं? Supervisor salary, everybody do calculate, come on. Very, very good. So I'm very happy students have not done any silly mistake with the number of months. Very good. Very good. Very, very good. All of you, your answers are correct, that we have to take for only 9 months. 8,000, excuse me, 8,000 per month into 9 months. So that is 72,000. 72,000, half of the time I have to take for only 36,000. Perfect, guys. Perfect. Okay. Now what's next? All other expenses and administration charges amounts to 136,500. So other expenses, I'm assuming this other expenses are directly attributable to the contract. This is my assumption. Okay. So 136,500. 136,500. Material in hand at site cost 35,400. By material at site 35,400. Material at site is like a closing stock. I'll write it on the right. The contract price is 20 lakh. On 31st March, 2/3 of the contract was completed and the architect issued certificates covering 50% of the contract price, and the contractor had been paid 7,50,000 on account. Okay. So contractor, how much he has been paid? Okay, that is of irrelevance. This line is of no relevance at all. The contract price is 20 lakh and architect issued certificates for 50 lakh. Students, अब सब कुछ ये लाइन के ऊपर है. ओके, सब कुछ इसके ऊपर है. Now, before I start doing the further calculation, now first of all calculate what is the entire cost of the contract till today. What is the cost till date? Come on, to calculate. So come on, calculate this. Take the total of all this and reduce this, because this has not been This is not cost yet, right? We are having this in the stock. Send your answers to me, okay? I got 10,49,000. Just check this if it is right or wrong. I've got 1049. Just check if it is right or wrong. I've taken the total of all this, okay, and subtracted that. It may be possible that I would have committed some error, computational error. You check it on your own. 1014. Okay, all of you, your answers are matching, so perfect. Now, students, the real thing is now he has told you 2/3 of the contract was completed and the architect issued certificates for 50% of the contract. We know on the credit side, we want two things: by WIP carried down or work in process carried down, value of work certified, and cost of work uncertified. So for the work which is uncertified, you want the cost, and for the work which is certified, you want the value. Now, students, I have got the total cost for 10,49,000 for you. I will be solving this first because this is the challenging part. This is very easy. But if I write this value, okay, it may add to some confusion. That is why I'm not doing that. 10,49,000 students, this is my total cost till now. This is my total cost, right? This is my total cost. 10,49,000 is my total cost for how much percentage? 2/3 of the contract was completed. 2/3 of the contract was completed. Understand this. This is for the 2/3 of the contract. This is for this cost which we have incurred, 10,49,000 is for the 2/3 of the contract. If that is for the 2/3 of the contract and we have received certificate for 50%, 2/3 means what? 2/3 means 16.6, oh so sorry, 66.667 percentage. This is 2/3. I have received the contract for 50%. I have received the contract for 50%. So how much is the work uncertified? How much is the work uncertified? See, I have received the certificate for 50%. Okay, so how much is uncertified? 16.667%. If this is cost for 66.67%, how much is the cost for 16.667%? That is the question. This is how we have to calculate the cost of work uncertified. See, this was the total contract that was performed 2/3, out of which I have received the certificate for 50%. So this is 16.667%. I have done the work, but I have not got the certificate. This cost I have spent for the entire contract. Come on, 10,49,000. Okay, 10,49,000. Okay, divide by 66.667% and multiply by 16.667%. So divide by 66.66667%. So it is coming somewhere 157,3500, 1573,500, right? 10,49,000 basically into 3 divided by 2, 1573,500, and I want 16.667% divided by 6. It is coming 262,250. It is coming rounded off, okay? So 262,250. Have you all understood this? Have you all understood this? क्या ये सबको समझ में आ गया बेटा? कैसे निकला? यही सबसे क्रूशियल एडजस्टमेंट है. In maximum questions, they will never give you the cost of work uncertified. कैसे निकाला अपन ने? They have told you that this 10,49,000 is for the 2/3 of the contract. ये कॉस्ट आपका पूरे कॉन्ट्रैक्ट के लिए हुआ है फॉर 66.67%, लेकिन सर्टिफाई उसमें से सिर्फ हाफ ही हुआ है, 50% ही हुआ है. So 16.667%, basically 1/6 is not yet certified. Okay, so basically what you have to do is for 1049 reverse working किया, we found the total cost of the contract 15,73,500. Okay, and taking the 1/6, I got 260 to 250. I can also do proportionate. 10,49,000 for 66.67%. Then how much for 16.667%? That is 260 to 250. Okay, this is how we have to do. This is how we have to do. और अब रही बात बेटा, क्या ये वाला पॉइंट सबको समझ गया? क्या यही चैलेंज है बेटा? यहाँ क्या ये सबको समझ में आ गया? क्या ये सबको समझ में आ गया? Everybody understood this? Perfect. Perfect. So now I just want the value of work certified. How to calculate? See, we know value of work certified. It's a very simple concept. We have got the certificate for 50% and the contract price is 20 lakh. Contract price into the certified percentage. So 20 lakh into 50%, that is 10 lakhs. That is the value of work certified. Contract price into what? Contract price into the certified percentage. So 20 lakh into 50%, I got 10 lakh, and this is the value of work certified. Okay. So always remember, in a contract account, you always calculate on the credit side value of work certified. This is our sales. This is our sales. And rest, this is always cost of work uncertified. For work uncertified, we never calculate the sales value. We always calculate the cost to cost. Okay, finish. Now students, after doing this, find the notional profit. Notional profit. Sir, why we have got notional profit and why not estimated profit? Beta, estimated profit is for the entire contract. We have just completed 2/3 of the contract. When the contract will be totally completed, we'll get the this thing, estimated profit. How to get the notional profit? Take the totals of the credit side. I think it should come 213250. I'll just check. So the credit total was coming 1297650 minus 2,51,000 minus 565600 minus 81,300 minus 14,000 minus 36,000 minus 136,500 213,250. Perfect. Perfect. Shri Raksha Vaishnavi, absolutely perfect. I hope it is clear for everyone how we have to calculate in this kind of questions. Okay, the most important part, the crucial part, we have already done. Okay, how to calculate the cost of work uncertified, how to calculate the value of work certified, how to calculate the notional profits, depreciation, everything. Now, students, in this one, in the recent exams, it has been seen that they have been asking questions based on escalation clause. Now, how to do the escalation clause? First of all, we'll understand what exactly do you mean by escalation clause. See, there are two types of contracts. One is a cost plus contract and one is a fixed price contract. In a cost plus contract, what happens is, uh, whatever is the cost getting incurred, will simply reimburse that and will add a percentage of profit and will pay him. जैसे I'll tell you a very simple example. मेरे भाई ने घर बनाया, ठीक है, तो उसका जो कॉन्ट्रैक्टर था उसने क्लियरली कहा था उसके कि जितना भी खर्चा आएगा 7% मेरा रहेगा, 7%. So if the cost of the house was 50 lakhs, so straight away 50 lakhs into 7%, 3.5 lakh is the uh, like contractor fee. Okay, so how much we will pay to the contractor? 50 lakh for the house and 3.5 lakh as his commission. So in all we'll pay 53.5 lakhs, like that. So this is how it works, right? The cost plus contract, this is how it works. Pura cost bhi milega plus a profit. So when you already the prices, the entire cost is getting repaid, okay, there is no need of any escalation clause or as such. Okay, there is no need of any clauses because every cost will get reimbursed at actuals. But suppose if the contract is a fixed price contract, I have given him a contract, okay, do make a building for me at 50 lakhs. Okay, I have given him a contract, do make a building for me at 50 lakhs. But the problem is when I have given the contract, that time the prices of materials, labor was very cheap. And all of a sudden, because of some unforeseen shortage coming, okay, because of some shortage, the prices suddenly spiked like anything. है ना, तो स्पाइक हो गया, बहुत ज्यादा प्राइसेस बढ़ गया. तो हुआ क्या कि जो कॉन्ट्रैक्ट को बनने में उसको मतलब कॉन्ट्रैक्टर ने सोचा था कि 40 लाख में बन जाएगा, 10 लाख अपना प्रॉफिट होएगा, वो खर्चा जो है वो हो गया 65 lakhs. प्राइसेस इतनी बढ़ गई लेबर की, मटेरियल की. In that case, obviously he cannot make this building for us with that amount. It is going to make bring him into a big losses. So इसीलिए कॉन्ट्रैक्टर क्या करते हैं, अपने कॉन्ट्रैक्ट में एक एस्केलेशन का क्लॉज डाल देते हैं. इफ यू आर गोइंग फॉर अ फिक्स प्राइस कॉन्ट्रैक्ट, अगर प्राइसेस 10% से ज्यादा बढ़ गई, 5%, 10%, 20%, whatever you agree for, if the prices increase beyond that level, maybe 5%, 10%, if the prices increase beyond that level, then the contractee will have to bear the extra cost and the contractor will make an escalation claim. Okay, that the prices have increased by so much. Okay, like 10% was acceptable for us, but if the prices increase by like 50%, the remaining 40% will be borne by the contractee, like that. Okay, so this kind of clause, if it is inserted in an agreement, is called as the escalation clause. This is applicable only in case of a fixed price contract. Okay, because in case of fixed price contract, they need to worry about the prices going up or down. So in case of a fixed price contracts, okay, if the prices increase beyond a certain level, the contractor is eligible to make a escalation claim on the contractee, but provided they have this clause in their agreement. Okay, that is escalation clause. Now we will be taking up a question from your study material based on this escalation clause. Now do one thing, come to question number 7. Students, come to question number 7. Just read that question. A contractor has entered into a long-term contract at an agreed price of 17,50,000 subject to an escalation clause for materials and wages as spelled out in the contract and corresponding actuals as under. So contractor has entered into contract. So they have given you for materials, this was the standard quantity, this was the standard rate, this was the actual quantity, this was the actual rate. Wages, same. These were the standard hours, this were the standard rate, this were the actual hours, this was the actual rate. Reckoning the full actual consumption on material and wages. Okay, so full actual consumption देखने के बाद company claimed the final price of 17,73,600. Give your analysis of admissible escalation claim and indicate the final price payable. Now, how much will be admitted? How much escalation claim will be admitted? See, the contract was for only 17,50,000, but they are asking for this amount, 17,73,600. Will we pay them? Obviously, no. We will check how much should be the escalation that is allowed. Now, how much escalation is allowed? How do we calculate? It is very, very simple. For every product, take the difference of price. Like for A, standard was 50, actual was 48. There is a saving of 2 rupees into standard quantity 5,000. So 2 into 5,000, the net saving is 10,000. What is it? Net saving is 10,000. Similarly for B, 80 it got reduced, 1 rupee reduced. For 3500 quantity, our saving 3500. But for C quantity, standard was 60, actual was 66, 6 rupees extra on 2500 quantity. So 15,000 we have paid extra, okay, have to be paid extra. So the net gap is 1500. This is admissible claim for materials. ये materials का admissible escalation claim है. It's very, very simple. This problem are very, very simple. Standard multiplied by standard rate minus actual rate. Okay, so standard quantity multiplied by standard rate minus actual rate. Everybody clear with this? This is the admissible escalation claim for materials. In case if you have understood, then calculate the same admissible claim for wages also. Calculate the same admissible claim for wages also. Come on. For wages also, we are having 3 workers. For every worker, calculate the savings and extra amount we are spending. Net amount, tell me. What is the answer? Samita, for all 3 workers together, okay? So Samita, Shikha, Sanmita, Bhavya, Shreya, very good. Very, very good. Shreya, Shiva Karthik, Shiraksha, Kirti, Bhavya, fantastic. Tanushri, Bharat, absolutely perfect. Absolutely perfect, guys. So all your answers are correct. That is 7,500. But I've got a query over here from a student, and the query is, sir, why are we reducing? Why are we reducing this 10,000 and 3,500? See, it is very simple. If the contractor is making an extra payment for material C, but on the other hand, he is also saving on materials A and B. So if he will come to us and he will ask you, sir, we have paid extra for C. Okay, so pay us 15,000. So we will tell him, if you are paying extra for C, you are also saving on A and B then. Okay, then give us the benefit. If you are paying for C, we are paying you. Then if you are not paying for A and B, if you are saving on A and B, then give that saving to us also, right? It's either way, right? So अगर आप एक पे एक्स्ट्रा खर्चा कर रहे हो तो वो पैसा हमसे ले रहे हो, तो जो दूसरे पे आपने पैसा बचाया है वो हमको दे दो, like that. Okay, so simple as that. So yes, Shreya, Bharat, Shraksha, everybody, your final claims are absolutely perfect. So only 1,500 for this and 7,000 for this will be allowed. So 70 minus 72, 2 rupees for 2,000 hours. So here 4,000. Here no extra cost. Here 61 rupee extra for 3,000 hours. So 7,000. So 7,000 and 1,500 total 8,500 will be extra. 8,500 will be extra. Absolutely perfect. Okay, so this is the admissible claim. Okay, in the 17,50,000 we'll just add 8,500 and this should be the final price that should be payable. I hope everybody it is clear. So this is from contract costing. और एक क्वेश्चन बेटा मैं आपको कहूंगा कि आप जरूर कैलकुलेट करिए. Students, mark my words. this question, okay, like the question 3 and question 4, I'll suggest you, I'll suggest you that these questions are important. Okay, question 3 and question 4, so and both of them are similar, both of them are extremely similar. Okay, so you can do any one of them, you can try any one of them. These are very, very important questions, and if you have any difficulties in that, okay, you can definitely ask me. See, we have to make a contract account. We all know how to make a contract account, right? Material issued on the debit, paid, prepaid, outstanding. Now, can you tell me, wages it is given paid, prepaid, outstanding. So how much will be the wages expenditure which you will take to the contract account debit side? How much will be the wages expenditure will be taken to the contract account debit side? Come on, do calculate. See this, wages paid, prepaid, outstanding, three things are given. I suggest you solve this question only for your homework. It's very, very important. And if you are able to crack this one, now you can easily crack the previous one also. Very good, Arya. Shikha, perfect. Everybody, it is perfect. Abhijit, Sanmita, Bharat, Shreya, it is correct. How we will do is, we have paid this, out of which this is prepaid. So obviously we'll subtract 37,500 and this is outstanding. So we'll add this up. So we'll get the total amount of wages for this year. Okay, absolutely perfect. Absolutely perfect. Similarly, now expenses also we are having paid, prepaid, outstanding, and what will be challenging in this question is, like, there are some plant. Okay, like we have purchased a plant of 4 lakh. There are plants written at store 1 lakh. We have written on 3rd of September 2020. Okay, that is after, I guess, 6 months. And in the next year, the remaining plant was returned. Okay, you have been given. So there, you how to calculate the depreciation on all that. So that is going to be a slightly challenging. Like 25% on WDV we want. Okay, so that will be slightly challenging. Work certified is given. Work uncertified is given. Students, if nothing is specified, always assume that work certified is actually the selling price and work uncertified is the cost prices. Okay, it is always assumed like that. Okay, work certified is at the selling prices, that is the value. What is it? That is the value of work certified. And for work uncertified, it is what? It is the cost of work which is uncertified. Okay, it is always presumed like that. It is always presumed like that. Next. So the contract is likely to be completed on 30th September. Basically, in the next year, in 6 months, the contract was completed. He is asking you to prepare the contract account. So contract account will be prepared for the first year. He is asking you contract account for year ended 31st March 21 for the first year. So we will not consider this data. We will not consider the second column. Remember that. We will not consider the second column when we are making the contract account, because he is asking you for only this year contract account. We can easily make it. That's not a problem. But he is also asking you the estimated profit on the contract. How to calculate the estimated profit on the contract? We all know, from contract price we have to reduce all expenses. From contract price we have to reduce all expenses which have been incurred till date and which are going to be expected in future also. Can you tell me, now see, can you tell me how much will be materials cost for the entire contract? See this now. I may slightly extend the lecture for 5-10 minutes, okay, because this is an important concept going on. Materials, we have issued 776250 in the first year. In the next year, 1299375 was issued. At site, at the end of year 1 was 80 to 500, and after the completion of contract, still 40 to 500 was left with us materials. Can you tell me what is the material cost for us? What is material cost for us for the entire 2 years? Material cost for us for entire 2 years. See this. For the first year, this was the material issued. For the second year, this was issued. In the first year, this was at site at the year end, and this was at the year end at the end of the contract. Understand this thing. When we have to calculate this 80 to 500, which is left at the end of the first year, obviously would have got consumed in the next year. It's quite obvious this would have been consumed in the next year. So we want the expense for the 2 years. It does not matter whether it is getting consumed in the first or the second year. It is getting consumed. How I will calculate? I'll calculate like this. I'll take this figure, I'll take this figure, and I'll take this figure. I will just ignore 80 to 500. I'll just ignore 80 to 500 because even if it is the stock at the year 1, okay, it is going to be consumed in the next year. So that's not a problem. The problem is the stock which is left after the end of the contract also, that is not getting consumed. So what I'll do is I'll add this to, these are the materials issued, and this is what is left after the 2 years. So 776250 plus 1299375 minus 42500. So 2033125. Arya, Abhijit, Bharat, all your answers are correct. 2033125 is correct. Okay, how I am doing is material issued in the first year plus materials issued in the second year, and what is left after the second year. Finished. I'm not considering what is left at the middle of the year. Okay, at the end of the first year, in the middle of the contract, even if it is left, it is going to be consumed in the next year. So not a problem. Okay, is it clear, everyone? How I have calculated this 20,33,125? This plus this minus this directly. I have not considered this. Is it clear? Is it clear? If it is clear, if at all it is clear, then can you tell me what is the wages expenditure for 2 years? What is the wages expenditure for the 2 years? What is the wages cost for the entire contract? If it is clear, then calculate the wages cost for the entire contract. Come on, that's the last thing what we are going to do. Very good, Abhijit. अभिजीत तैयारी चालू है पक्की एकदम. हाँ, गुड 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 गुड. अच्छा है बेटा, और शॉर्ट में निकालना ही अपने को. Yeah, correct है बेटा आंसर. गुड. Shri Raksha, it is not correct. Shreya, it is not correct. Tanushri, Bharat, your answers are correct. On everybody, do calculate. See how to calculate. Think practically. Think what will happen in practical life. How will you calculate the expenditure? Bharat Srujan, it is correct. Understand, wages paid in the first year, okay, wages paid in the second year, and whatever is left outstanding at the end of the third year, at the end of the contract, this three, if I simply add, I'll get my answer. This two and this one. Try to add this three. I'll explain the logic. First, add this three. Come on. 517,500 plus 6,18,750 plus 5750. The answer is coming 11,42,000. I have simply ignored prepaid at the end of the first year and outstanding at the end of the first year. Sir, why have you ignored them directly? Beta, I have ignored them because even if it is prepaid in the first year, that is going to be the expense of the next year. So I'll do minus plus nil. Outstanding for the first year was paid in the second year. So minus plus nil. So remember this, how I will calculate my total expense for the contract. I have paid in the first year, I have paid 5,17,500. In the second year, I paid 6,18,750. Think from cash perspective. Think from cash perspective. मैंने पहले साल 5,17,500 पे किया, दूसरे साल 6,18,750 पे किया, और अभी और इतना पे करना है. Okay, so think from cash perspective. I have paid this one in the first year, this one in the second year, and this one is still pending to be paid. So this three is my total cost for the 2 years. This is my total cost for that contract. Okay, so remember this. Try this problem. Okay, have you all understood the logic now? Similarly, obviously, we'll do for the expenses also. Obviously, paid in the first year, paid in the second year, add outstanding in the second year. Simple as that. Okay, so I hope everybody, the logic is very clear. Okay, how you have to do, think it from cash perspective. पहले साल मैंने इतना पे किया, अब जैसे मुझे expense का अगर निकालना है, it is very simple. In the first year I'm paying 225, in the second year I'm paying 375. I'll add this two, and again there is 10,000 more to be paid. So I'll add this two and add this one again. Okay, so 225 plus 375 plus 10,000. So the answer will be 6,10,000, like that. Okay, so this is the expense for the 2 years. Okay, I hope everybody it is clear. So this way we normally solve this kind of questions. This is all from contract costing. Everything is covered in quite detail. In fact, we solved 2-3 questions based on this because many students are actually afraid of contract costing. Okay, that is why I actually solved a lot of problems on this. Okay, and this is scoring. Okay, that is scoring. This is where you can score well. You can score well in this one, you can score in batch, you can score in cost sheets also. Okay, that's why we solve problems on that also. So thank you so much for joining me in this amazing revision, right? I hope you all have liked this revision. Chaliye, I'll see you tomorrow for the further chapters. Tomorrow in the next session we'll be covering the topics of unit and batch cost. We'll be covering the topics of joint and byproducts costing. We'll be covering the process costing. We'll be covering in the next session. I'll be covering most probably one big chapter. Okay, maybe standard, or maybe budget, or maybe marginal. Okay, but one big chapter tomorrow I'll take, because I don't want to keep everything for the last one. Okay, I don't want to keep like that. So in the tomorrow lecture now, you can suggest me anything you want me to take first. You want me to take marginal or budget or standard, I can take that first. Okay, but tomorrow I'll be doing that joint product and byproduct, which is a very simple chapter. Then is a process costing, which is again a similar chapter, a simple chapter. Okay, not big one. There's accounts we have to make. Okay, but yes, the challenging part will be one big chapter tomorrow I'm going to take. Either it will be standard, marginal, or budgetary. You can send in your suggestions. Okay, I'll consider them and I'll choose that. So thank you so much. Okay, thank you so much for joining me. Okay, do share the videos with your friends and all that who are preparing. Okay, I'll see you all tomorrow then. Okay, take care, study well. If you have any doubts, keep in touch with me. Okay, thank you so much. Bye bye.